So from here, 5 up, 3 down. Now we need 5 waves to complete wave 3, right? Because it's a motive wave. So we can take this as a wave 1, down in 2, up in 3. I had this one here as a flat, okay? So we can count this thing as a flat up in B and down in C. This is called a running flat. I mean, we could do a triple combination here as well as we can just do, like something like this. So make it like as a W, X, Y, connector X, Z. So we can move this wave 4 here as well. Okay, that is okay. We can still do that. If the wave 4 ends here, right? So this 3 stays where it is. So basically, now we need 5 wave to the upside to complete this wave 3. So by putting wave 4 here or making as a flat, because remember, we want to make sure our wave count has the right look. Okay, it is the most important part when it comes to Elliott wave. You can't just throw labels left and right. It's just not gonna work. That's not how Elliott works anyways. So if you start like put 4 here, your upside projections will be based off from that low when you're gonna run the upside swings. So you always have to make sure, like, is my wave count has the right look or not? So I can adjust it both ways. Now, if we put fourth wave here at the low down here, right? So we need 5 here now. So how do we count 5? We have this huge move to the upside, this, and now this one right there is a lower high. As you can see, so this 533.82 is the high right there. This wave 1 right there is a lower high. So we cannot close this thing as some sort of a diagonal either, unless we can do by keeping the 4 here, we can just have 1. Now we're looking for a diagonal down in 2. Then we can take this as a third. We can take this as a fourth. And then we can look for a fifth wave. Then the 3 will go here if we make the case for a diagonal. It does look to me like some sort of a diagonal. Why? Because it has a lot of price overlap. Okay, diagonals always going to have a bunch of zigzag moves. Okay, so they're always shapes like this. Oops. So it always shaped like 1, 2, 3, 4, 5. This is how diagonal goes. Has a lot of price overlap. So most of these ending diagonals, they always form in a wave 5 because it's going to have that wedge shape, like the price starting to contract, like starting to form a wedge. So from here, there's a 3-wave decline after that. And most of these ending diagonals, they reverse pretty sharply to the downside. I don't know if this is the early sign of this diagonal that is starting to reverse yesterday. So that's it. Excuse me. So this is how I have this thing labeled. And then if this is the case, then we just look for this wave A decline, bounce in B, then we take the leg lower. This is our downside zone right now for the wave 4 by doing this. The other way, because the thing is this entire price action, you can see how much price overlap we have here, right? This is some sort of a this is called distribution phase. This is the accumulation right there. This is the distribution. Okay, so this is how I see it. So if you look at this trend, how it's going up, and then it's just literally taken a pause. So we're pretty much done with all the earnings, except we have Nvidia's coming. So we will take a look at Nvidia in it later. But that's the only one. But the way Apple is moving, I was so surprised yesterday. Like the overall market is down like 800 points or so, and then Apple is just was actually moving to the upside, but end up flat. But but now we're gonna have Nvidia earnings. So what is that will do to the market, and then how the other Mag 7 will react to it. I mean, Nvidia being such a huge stock, I mean, it will definitely is going to shake the market, especially all the semi stocks, all the AMD and, just all the cloud companies, like whatever, whichever company, like lately, which one is the Accenture is the one they signed up in Nvidia, ServiceNow. These are all stocks is going to get impacted with Nvidia earnings. So, I mean,
Mo,
we
Mo,
could, yeah.
I think your screen is shrunk because you see there's an icon of TTH up on the chart.
What
Is there
happened?
any way that your screen is shrunk because there is an icon of
Oh,
TTH?
Yeah,
Can
TTH needs to turn his video off. If he doesn't do that, it won't go away. TTH, if you can hear us, please turn your video off.
okay, he
Thank you.
did.
Thank you.
Okay. Um, so the thing is like there's so many ways I can turn this thing around. Okay. Um, we could do a triangle here as well. A, B, C, D, and E. We can put this wave 4 here. That is another possibility as well. You know, the point is like it's not easy to like I can change this thing, but at the same time we're like keep changing wave counts every single 2 to 3 days. That is not gonna help. We gotta have to have a one plan and just stick to it. Yes, it is not up to us to decide like which way the market is gonna move, but but labeling something like this is much easier. It's more compared to this price action here. You can see it as well. I mean, this is technically, if you would ask me, yes, the market has the Qs has made an all-time high, made a new record, new all-time high. But this move right there, I would just go back here. This run the Qs just had to new all-time high because by taking out this 539.15 high, went up to what 540. This is technically a double top. Okay, you just were talking about 1 point, right? Well, Qs are making a new high right there. Well, none of these Mag 7s are making a new high. So what was driving Qs to the upside? Apple was not making a new high. Nvidia was the one who's trying to close the gap from the DeepSeek sell-off. Meta was the only stock that was running for 20 straight days. Now that stock is pulling back after 20 days run. Netflix is just right around to the 1,000 mark. You know, none of these stock like Google is down. Amazon, the one who's taken a punishment for 8 straight days now. And then we have what Tesla. Tesla is not a macro stock for the overall market, anyways. That doesn't do anything. So And then we have Microsoft, which is God, like it's just a sideways as well. Microsoft. We traded Microsoft, got to 418. That's what I had the target set, cashed it out. So like I'm out. That's exactly where the 200-day moving average is. I was like, it's the stock has been down for so long. I was like, I'll just see if I could try to play the bounce with the help of RRG because it's trying to, rotate toward the improving quadrant. As that's what I took a bet on a Microsoft to see if I can just play the bounce toward the 200-day moving average. It got it tested the 200, got rejected. I was like, that's it. You're not gonna break 200 instantly. We all know that. If you have a price sitting down here and you have a 200-day moving average sitting up like this, the price is gonna come back, is gonna hit the wall. It doesn't mean you're just gonna rip right through it. It's a very strong EMA or SMA, but I don't track SMA, simple moving averages. I always do, EMAs. So it hit 418 mark. And now it didn't made a new low. We will take a look at Microsoft, and just backed off. I was like, okay, fine, I'm out. So that was the play that I did on a Microsoft. So the point is like, I mean, there's one thing that I don't like about doing L is just to keep changing the wave count. And most people who really don't have enough experience in Elliott wave and are always thinking like, what the hell is going on? Why A is here now? Why C is here? Well, we want to make sure our wave count has the right look, right? I would love to keep the four here and just go as a one, you know, keep the fourth here, go as a one, two, and then you go like this. But that's not the case here, but you have a lot of price overlap. That's one case. Second is like I could make this whole thing, I can move this fourth here, make this thing as a triangle. Then we can get a push here in 5 waves to complete this wave three. Regardless, if we go up in a three, this fourth wave is gonna come into a play because you're gonna have completed 1, 2, 3, 4, and 5 to make this three. Then we have 3 wave decline. Then we get one more push back up in a fifth, and into a fifth wave. Now, the reason why I did this, thanks to my friend there at Optima, is because this, you see, he actually pointed this thing down. Now, he ran the absolute return from 1953 all the way down to 24. So he even wrote here, there's a 67% probability of gain of 100, there's a 67% probability of gain of 100 days after January 20th, approximately 68 trading days, the average return of 1.26%. There is a dip second half of February. Okay, yesterday was 21st. So we're basically right at the mid mark of February, because now February has been a shorter month. We all know that. Next week is the last week of the month. And then from here, there's a dip in a second half of February before it recovering into the end of April. So if I would, this is how I, when I posted that wave count, I'm considering this. It looks like that this part right there is going to come into a play. But again, one single day of decline doesn't make the trend. Okay, you cannot make anything out of it, or just a one straight line to the downside. The trend is up. The trend is not down. The market is not bearish at all. If somebody can tell me that if the market is bearish, I mean, I don't know how you probably have to either fix your monitor or there's something wrong how you read price. So if we would consider this, okay, this is how I would say, like, okay, if there is a decline in play, then we can make the case here for a wave 4. And then for this wave 4, then we look for this into the mid-March to, toward this April. This is where you can see right there on the bottom of the chart goes to the April time. So this is what I would consider is to complete a five waves to the upside. Now, if I say, like, okay, well, if we can move this 3 here, this green 3 here, make this a 4 of green 4, and then make this as a 5. The problem with this is I'm just going to change all the label. If I put 3 here, okay, I was going to change it. It's very difficult to count 5 waves here within the 3. Okay, how are we going to count this? 1, 2. How are you going to make this as a 3 with the overlap with 4? So you have a wave 1 with this shorter wave 3, and you have this kind of extended wave 5. It's not going to work. It doesn't fit. So if we really sit in and call on a top, I mean, could be, but that has to kind of like come all the way back down for me to readjust the whole thing. It's just, I mean, there's so many ways that we can look at this price. We can do this. Okay. This is another way to look at. This is a perfect round bottom pattern. As you can see, are we doing this? If this is the case right there for the wave 4, and then there goes the breakout of a cup and handle. That's another way to look at it. The point is that this is, if you can come to me with something that you think that how to label this thing, I mean, I will take a look at it, but I can show you on like how I see it. This is a really nice round bottom pattern from this high. It's just a matter of, are we doing this? If there is a spike in volatility, okay, because if you have a cup and handle, the handle needs a spike in volatility anyways. Okay, so that is going to, it can come, the handle can form, but we will see how I am considering this, and look for dips to buy, and into March and April. But if this is the case, first we need to have a wave decline, then we'll get the bounce up in B, then we will measure this decline right there, the initial decline here in A, projected from this B, and then we'll look for another C to the downside. Okay, so in that case, regardless how the price will come down, we just have to build the downside zone. So what we have here, 23.6 at 517, 61.8 at 514. Our major support is back here of this high. It is where we had a 10% decline, 503, 38.2 sitting at 503 as well. 100% relationship of 4 versus 2. I don't do label this. 4 versus 2 at 499. So 499 to 503, which is this support right there, along with 38.2. I mean, we have this zone along with 23.6 and 61.8. So this is the first zone that we can build here to the downside. Okay, so where we at? 523. So if this is an ending diagonal with an overthrow, if it's coming back down, the minimum downside target for this is going to be 521. Remember, we always talk about these diagonals that are very well-defined targets on leading diagonals and ending diagonals. And then the second one would be the wave 2 low of 511. So these are the downside targets for if this is a diagonal. But again, if we are making a case here to the downside based off this. Now, if we go back to the swings, okay, this is where I get my confirmation first, because I am well aware of that wave count can change. I can change the wave count in 10 different ways, right? But I need to make sure what Gann is telling me first. Then I will adjust the wave count. The Gann picture here is not telling me this, that the swing is down. The swing is up. So this is the weekly time frame. So the weekly time frame, the price, the week we just had, a short week. Here's a SPY right there. This is the decline that we had for 5.5%. And we just made it all the way back up to the high. This is the round bottom right there, as we talked about just now. Here. So if these two are the round bottoms, but the bottom twos are not, what is going to drive the market? This chart. This is the most important chart. You have to fight your life on this chart more than this. This drives this one, right? All the Mag 7 stocks are here. They are the leaders. They are the one who's going to drive the market. So the small cap, this is the complete mess. Nobody can understand these small caps. And then we have the value, Dow 30 stocks. Mega growth, large cap. So looking at all this, okay, so how did we end it this week? We had a higher bar, lower bar, lower bar. This is not a trending market. This is not how market trades. Like, you know, you have two sides are to the down, going to the downside, and you have two sides are making new higher highs. Twos are making lower lows. Now the point is here, the small cap has already, it took a 12.7% decline. This one took 5.5. This was 7.3. And this was 7.3. Right there. So you have a 7.3% decline back to 7.6. You have a 7.3% decline to 8.2. You have 5.5% decline to 6.6. This one came down to 5.7, only went up to 7.8. So what does that tell you? If market is bearish, it would resume trend more to the downside. Okay, there are buyers sitting in this market. There are more buyers than sellers. These dips are getting bought over and over again. We can clearly see it. If there would be no buyers, this thing would resume more to the downside. It would not be making rebound like this. People buying weakness in this market. I mean, I don't understand. Like, I don't know what sort of negativity is out there. I mean, we just got out of the earnings season. Yes, CPI came up, CPI and the PPI and whatever all the data is. Nobody can understand those numbers. Like market really, and everybody was like talking about tariffs. Trump is gonna come, is gonna do this and that. But all these tariffs that he is laying out there based on all this negotiation, he's given them the warning early signs like, okay, hey, I'm going to leave this thing up on a table for another month or two. He knows that more and more tariffs he's going to announce, he's going to shake the market, and he's just laying out there on the table. Meet us halfway or whatever. You're gonna match the same you know the port duties and stuff, and then I'll take this thing off. It's like his bargaining tool that he uses because he has the power. But see, a lot of people, like before, if you remember his previous term, one day he will announce like, "Oh, I'm going to hit China with 20% tariffs," and then market just sells off really hard, you know. And now he's playing this way, like, okay, I'm going to announce these tariffs. He's laying out there up front, and then what happens? Market knows. Market just really doesn't respond to it. It's gonna starting to get baked in. It's the same thing the Fed has been doing. You see, like these are the things like you make these early in like you tell if you tell in the market up front that this is can happen and will happen, market will respond bit to the news and will just recover. By that time when you announce that thing, market just really doesn't care because you already know. Yeah, I'm not worried about these tariffs and stuff, to be honest. It's just, I'm just looking at like being February as as a flat month. It is, and but I mean we're like 2% from an all-time high. So the point is like we just had we were down for five and a half for down for 5.5%. So how many weeks were that? 1, 2, 3, 4, 5, 6. So that took 6 weeks. Okay. And how many upside do we have? 1, 2, 3, 4, 5. So let me explain you one thing so you were down for 6 weeks and you up for 5 weeks. So how can your upside can be shorter than your downside? If you have an accumulation phase, then the market has a distribution phase. And then after what happens? You resume back up in accumulation phase. So if this accumulation phase right there, it could be 10 days. How on earth you going to tell me that your accumulation here only is going to be 5 days? I just want to see that if somebody can explain me that. How an accumulation phase can be shorter in time and price compared to distribution phase. I like to see that on a chart if somebody can show it to me. Anywhere. this is either the way I see it, this is a distribution phase. Market is gonna stay choppy. That is gonna make it very difficult for option traders to trade the choppy market, because options are either more directional bet that we make every single day. Either we're buying calls or you buying puts. But if you take in 1 day price action or 2 days price action, that doesn't do much. It's just not gonna, it's just okay. You caught a 5 point move on a one single trade, but you have to look at a big picture. You have to look at a little bigger time frame to see what the market is actually telling you. We can make a bear case, but I need confirmation. I need the screen to tell me this, that yes, hey, the swings are down, so don't fight the upside. I'll stop there, but I'm just like, I'm a trader who likes to trade in the direction of the trend. You don't trade against the trend. I understand that the market will have dips and is get reversed, and anything can happen. We all know that. But I'm just I don't fight trends. I ride trends. You should do the same thing as well. Our job is to trade in the direction of the trend. So by doing, like, changing labelings here, that everybody love to see, what are we doing here? I I originally had this wave 4 labeled here, counting as the same as a WX, X, and Z. But then from here, how can we make this as a diagonal? We cannot, because if I take this leg up, that's 2 down. So that's will be 1, 2, 3. Here comes a fourth. Now it has to stay above this low, which is 59.23. And then you get another 3-way push to the upside. Then you can say like, okay, fine, here's a third wave. Then from here we can look for this fourth wave. So there's so many ways that you can change that, but at the same time, diagonals are not easy to trade, or triangle. These are the worst waves to trade. Ending diagonals, okay, then triangles. This forms in a fifth wave, this one forms in a fourth wave, and then you have a leading diagonal that forms in a wave 1. These 3 are the most difficult waves to trade, but they come, but there's nothing we can do. The only one that I love to trade, I'm always looking to trade, and this one I'm after, is always the wave 3. You try to count 5 waves to the upside, 3 swings to the downside. As long as you have 8 swings, and if you manage to find support, if the price can find support here, this is what I want. This is where you're going to make the most money on any trade, after 8 swing lows if you have 8 swings from the low. Now the 8 swings from the low can be on a 50-minute chart. It could be on a 1-hour chart. That will be the ideal time frame. Or you can just go on a daily chart. But then you just more, like, higher and higher the time you're going to go up on time, or longer it's going to take. So the time is very important. Which time frame do you pick from your it works for you. Like, if you take, here's a major support, right? So you can count this as a 5 wave. So you have a high swing. Here's your higher low. That's your higher high. After taking out this high right there. So you can do this thing on a blank chart. Now, if you want to make it more technical by making a full wave count, where's going to be my A, where's going to be my 2, where's going to be my this and that. I mean, that's the whole different game, because your starting point is this, not from here. You know, so you can do the same thing here as well. This is the low. That's your high right there, right? Broke above this high. Higher low. Higher high. Broke above this high right there. So what is the basic 101 for trading? This. That's your low. That's your high. Higher low. Higher high. Same thing to the downside. This is basic 101 trading. It's the same concept here on Elliott wave. It's the same concept on swings that you're looking at. Elliott just gets more advanced. It's just gonna throw you into those corrections and that kind of stuff. It just has a lot more fib work come into a play, you know. A basic swing doesn't have all this nonsense. You know, you can just keep this thing as simple as possible. You know, sometimes they always says like you should keep your technicals as simple, you know, rather than too advanced or making this kind of more complicated. I get that, you know. In making wave count is not something you can just start throwing labels left and right. You have to really make sure where you actually anchor your wave to, where the smaller, you know, because it has a lot of subdivisions and it has all these relationships, you know, from smaller degree, from, you know, from higher degree to a smaller degree, and then a smaller degree. You want to make sure that doesn't really look too goofy against your one higher degree time, you know. The wave, like this one shouldn't be, you know, like bigger than this on your one higher degree. You know, they call as a parent wave. So 1 and 2 is your parent wave, and then a smaller 1 and smaller 2 is a child wave. So you want to make sure your child wave stays smaller in magnitude and length compared to your parent wave. It's like the same thing, like having a son. How the son can be older than a dad. It cannot, right? So it's the same concept. So parent is older and then the son. So it's that's why they start using those, they call those degree violations. That is meaning that your child waves must stay smaller than your parent wave. That will give your wave count a much better look going to the upside. And it's going to be much easier for you to run your upside projections with fibs that will give you a very well-defined targets. This is what you are trying to target to the upside. If you will have a bigger child waves here, and then you're trying to run, because you're taking because all these fibs are taking these highs and lows. This 5 versus 3, there's so many of them that I can run to the upside. It's just because it all depends how you label this thing. So if I do here, so what do we have here? 5 versus 3. Pin this thing. You have 5 versus +1 +4. So you have a wave 5 here. Take the wave 1 and wave 4. You see, like you have what? This one doesn't have. 5 versus 1 plus 3. You see, like you could have a stack of like these are all different waves. 5 versus 1 plus 3, 5 versus 1 plus 4, 5 versus 3. So you like so if you sit in here and you're trying to go to the other, well, you should have a well-defined target, right? Like, why are we in a trade if we don't even have a target to the upside? So what are you trading? Just blindly trade and see where we're gonna get lucky? This thing can change as soon as if you slide this thing up here, or if you move this thing here down here to this wave 3, if you turn like, see, high drags everything down, everything can change. So if you put them here, see, it goes up. If I move it here, it's going to go even more higher. This is this is going to come from a years and years of practice. This is not something that that you're just going to learn in a matter of couple weeks or couple months or 6 months. You think like, yeah, you know everything. Good luck. It'll take you years and years. You have to sit for 12 hours straight every single day for several months. Then you will see how you will be going to improve your labeling and how Elliott is going to come. Elliott is not easy. It's a very advanced technicals. But looking at bunch of ABCs and stuff that most people are looking at, oh, this is down, oh, this is a B, and now we're going to be. Nobody has a single clue. Somebody posted that thing yesterday from that guy. The guy is like, a C wave cannot be a three-way move. So people still don't get that. It's an actionary wave, C wave. Okay? So this thing right there is a three-way move. So if you making this as a flat, that's A, that's B. Oh, you can make this one B, sorry. So you do A, then you do B. Okay? You're making this as a flat, right? Okay, let's talk about it. So in a flat for a B, which pretty much goes up to a 90 degrees up to new highs. So you have an A, B, C to make a B. Now, if you put a B here, this price action here is a three-way move. How a C wave of a B can be a three-way move? It cannot. Elliott has a well-defined principle that has been written from 1930s. It's C wave cannot be a three-way move. So if you are looking at this, okay, but it's not how correction works. Unless if you, I'm just so I took some time yesterday. I'm just like, I'm not really sold on this thing yet. I'm only taking this I took this as a and consider this first. I was like, okay, if there is a weakness come into a play toward the end of the month, I would consider this to make a case for this. I was like, okay, I can do that. But then I come back here. Well, this is not what this one is showing. I have Gann and Elliott wave work side by side with me for a very long time. The reason for that I have that I mean, I'm not bragging here. The reason why I win so many trades is because I have combined these two, Gann and Elliott wave, together, and I know that works. Because Gann swings doesn't have any labeling. It does, but it has higher and higher swings. It has a swing counts, but it doesn't have those rules and stuff like Elliott does. So if the swing comes down here, then I can make the case toward the to the to the wave count. Now here's a daily time frame. Oh boy, it's kind of messy. So what are we looking at here on the daily time frame? We were at the weekly before with the round with the round. It's the same thing here. We have SPY and Qs. Swings are up. You can see right there. We have small cap and we have value. Swings are down. It's exactly what we just looked at on a weekly time frame. Top two sides are making highs, bottom two are making lows. So what does that tell you? I mean, all the stocks, which basically Apple, Microsoft, Amazon, they're all here in Dow 30 now with Qs. It's just when you have swings, or when you have this kind of a screen in front of you, when you have a small cap which has 2,000 stocks, the overall index or an ETF is making lower lows. And a downswing, what do you think those stocks is going to do? Nothing. Same thing happened here. So these two are, this is down 3.8. This was down 5.7 already on a downswing. As you can see right there. These swings are up. I would, I mean, I have a hedge on. I would like to keep it. um, I mean, I mean, I don't know where the price is gonna stop in the next 4 weeks, 5 weeks. It expires on March, so I got 5 weeks next week, and then 4 weeks for March. I mean, if we can just land this thing at 59, I mean, guys, I don't know how many you guys gonna hit a massive jackpot, but I don't know what is gonna happen. I centered the butterfly right at the 59, as you all know. The reason why I did that, because when I consider all of these highs here, I was like, these are very weak looking highs. It's just like less than a point, you know? So I'm just like, it's like it looks to me from 5.5% decline to these highs right there. I centered that thing right there to this 59. So the hedge that I have, well, I don't know what's going to happen. If the price closes here in the next, well, we still need, what, 5 more weekly bars. Okay. So we need another weekly bar. Could one go up higher, lower? For however it's going to come, I don't know how it's going to, how are they going to come into play? We need 5 bars. But as long as these 5 bars close, well, this is the center of the butterfly. If it managed to close here this is where you're going to hit a jackpot. If these weekly bars starting to close lower toward this, yeah, I mean, there's a pretty decent payout. The payout as well, because downside is capped. So you're going to make guaranteed profit no matter what. Because all three strikes will be in the money. So you long one, you short two, and then you long one. That's the butterfly. So all three will go into the money, and then you can just let the thing expire. You know, it's not going to worthless, but it's going to pay you. It depends how many contracts do you have. So that's the bet that I'm making in this choppy zone. I was like, okay, fine. I will try to play the upside if I can, but at the same time, we'll just keep the hedge on the board and wait for time to go by and see if we could come close. I have my finger crossed and see how it's going to come into a play and just go from there. I mean, I like to stay bullish because there's nothing bearish about the market. If we just gonna chop around here for a couple more weeks, I mean, because if this is coming down, well, eventually it's gonna reverse back up as well, right? It's just a matter of time. I like to look at things on a weekly time frame more than looking at day-to-day daily bars. You know, it's a 1 week. I mean, that's a pretty big one right there, as you can see. So this week, from 227 down to 217. So how much was that? 227.67 was the high minus 217.46. That's 10.21. 10.21. Now, if you take the ATR, it's a 3.65. It's a 3 standard deviation move. It's crazy. You really think this way. Small caps are just, I don't know, brutal. A 3 standard deviation move in 4 days, even the fact we have a shorter week. Remember, we're closed on Monday. Here, we take 446 minus 433 is 13. Is 8.64. So it's a little over a 1 standard deviation move. This is 3. This is a little over a 1. So this one, we take 613 minus 599. That's 14. It's 8. And this is 7.57. It's just, oh, sorry, the 10 period is 10. Why is it 3? Oh, this is a daily one. That's why, sorry. 9.15. I was looking at I have to look at the bottom. I gotta remove this one because it's capturing the daily one. Need this. So 9.15. This was 15.34. So it doesn't move that much. This one's 11. So this one does match. So yeah, 446 minus 433. Yeah, 13. So a little over a 1 standard deviation on that one. This one was 9. So this one is good. So now we take 227 minus 217. That's 10. Yeah, 9.15. Yeah. So 1 week is 10 points. This one was 540 high minus 525, 15. It's 18 because it was a higher bar. Remember, when you have a higher bar here, your downside is gonna hold by Friday, because once you made a higher high, the bar turns green. It will stay green for the whole week. It's not gonna turn red. It can only turn blue. The reason when this bar turns blue is when it makes a new high and it takes out the low as well. It engulf like this one. You see, like it broke above 519.65, made a new high. Then it reversed back to the downside, took the 505.71 low, and turns blue. So there's only 4 bars that I watch. That's all I know. You know, you have lower bar, which is red, green bar, higher bar. Blue one is the outside bar, and then the black one, inside bar. So you have an inside, which doesn't make a new low, doesn't make a new low and high. It just stays in between. The considers indecision bars. And then blue ones are the ones engulf on both sides. Then you have a lower bar. Once you take out the low, it's just gonna go red. The whole week is just it's reversed, but it remains red. And then you have the higher bar, lower, higher, higher, and higher. So Dow today was weak, especially past two. Yeah, I mean, if okay, let's look at the Dow here, which you're looking at right there. So Dow had a lower bar right there. A week before was inside week with this doji candle that you can call it, right? Has no body. So what are we looking at where we could find a potential support? I mean, to me, what it looks like, these are all double tops, right all there. Okay. Where we can find our support if there is more downside is coming into a play. Simply run fibs. We're going to take this high right there to the previous decline of 5.4. We're just going to watch this. At 598. We closed, the low yesterday was 599.47, 594, 589. This is what I will be watching next week. Instead of fighting our life here, which is a 4, it's a 5, is this, and I mean, we can do all this. Okay, I can show you the most beautiful wave counts ever. That's not a problem. Just focus on simple prints. If you see a price here, and if you see a price here, it's the same thing. But why I or you have to sit and fight your life over an ABC or 3, 4, 5 or this and that? That will adjust. Okay. So it's the same support here. I mean, this one was gonna give a little more different fibs compared to these ones. But the price is price. It's the same price here. It's gonna be the same price on that chart as well, right? So here we have 525, 525.71 was the low yesterday. So 525, we're sitting right there. Next downside is 520. That's 5 points here. And then 515. So that would be the downside that I would be looking for next week. The next week is where the month is going to end anyway. So this is going to be our, and then we can do the same thing here. Take this swing to this low. Here we are at 217.55, almost right at a 78.6. So what we need to do now is to defend this low to make sure if this low shouldn't get taken out. But we need to watch this 217.55. We don't want to close below this because this will the low will come into a play. So we're right at 78.6. We'll literally pin it to the textbook print yesterday. So the next bounce from here, market would bounce would be 220. So the 220 would is the low of 2 weeks ago. So we have 217 to 220 bounce. If the market will bounce next week for the small caps, and if the 78.3 is starting to get, if the market is going to get, or if this is going to get heavy, 213, the previous low of 12.7% decline. I'm going to make this thing really simple for you guys. You know, you can give me a little bit of a break on the wave counts as well. Same thing here. You have a Dow here that is, you take the swing high right there. That's your swing low of 7.3. Draw your retracements. It's a whole week for sake. I mean, take it easy with your daily updates and stuff. Just look at a bigger time frame. It's going to be the same thing. You have a 433, but the low yesterday was 433.35. Next downside is 430. Then this is a 78.6 at 425. And our high, the high is 450. So if you are looking to, if Dow would get a bounce, the first bounce, you just look reverse. All you have to do is just look backward. What would be the upside? 438 and 441. You could take out this low, the previous week low of 441. So that would be your resistance. So every time when the broken, you probably heard of this, broken support on the way up act as a resistance, right? A broken support on the way up act as a resistance. Broken resistance here act as a support to the upside. So you have a high, you have a low. Don't worry about the close and open. It doesn't do anything. You have a high and you have an open. Sorry, you have a high and you have a low. So if you're bullish, what are you looking for? Price to make a higher high. So if you're bullish and if you stuck between the range, you're neutral. I mean, you just have to wait now. Because my price is not making a new high. It's not making a new low either. It's a neutral. Like, you just should never just write this thing down on a piece of paper. Never add risk on an inside bar. When it comes to a daily or it comes to a weekly, leave the way it is. It is the worst bar to add risk on your position. And technically, I hate them. To these, a lot of guys have that to average entries. This, and I do it, and I hate myself for it. I'm not a very big fan adding risk on a same position, just trying to average my entry. No. I will do it once in a while. Depends how the price looks, how much time do I have left, or if there is a potential mean reversion signal that I've got, or some sort of a 78.6 retracement that I'm really watching, thinking like, yeah, this might hold, that would give us a bounce. I will consider that part. But just to throw in, if over a 1 or 2 sessions, then I'm just going to start throwing more money into the same trade. No. If I'm wrong, I'm wrong. It's okay. It is not the end of the world. If I'm wrong on a 2 or 3 position, it's just, it's not how I look at trading. I know how to win 20 trades in a straight line. I've done it many times. But I want to I'm very strict when it comes to risk management. If you have to look at this way that trading is only a probability. We trade the unknown. We don't know what is going to happen on Monday. There's not a single person in the world knows how the market will open and close on Monday. We might drop another 1,000 points on Monday. We don't know that. Nobody knows that. We can just rip right back up. How many times have we seen a reversal with this thing? We've never seen that movie before. It's just as long as we have time, we just gonna, I mean, having, well, if you have to look at this way, that a market is gonna have a 800 points drawdown. There's not gonna be any stock is gonna rip into the upside. Everything across the board is gonna be under pressure, right? It's not just your stocks. I mean, for your 401k, your pension funds, mutual funds, college saving accounts, everything is gonna go down when you're gonna have a 5, 6, 700 points. If you have a 401k, well, look at your 401k on Thursday and then look at how it closed on Friday. That's down as well. So your stocks are down, the positions are down. Yeah, I mean it's not a fun day to look at the board of like everything is bleeding. But what can we do? Well, that doesn't mean like we're just gonna start throwing money. Oh, I want to average this entry and see if we're gonna get a bounce on Monday or Tuesday. What if there's no bounce? Then what? Now you just added more risk. No, it's just I don't. That's just not my style of trading. If you're wrong, you're wrong. It's okay to be wrong. There's nothing wrong with that. I don't know why some people get so emotional because oh I'm taking a hit on this trade and well it was not your fault. I mean if the entire market is bleeding 800 points, what your position is going to do, you know you just have to just let it go. 6.5 hours, screw it. I didn't even really pay attention looking at my P&L yesterday. I was like, I can see the chart. I don't want to torture myself just looking at the board. Just leave the way it is. There's no point to cut something, make emotional decision on a down day. Like, what if you get a bounce of 3, 4 points or whatever on your position? At least you can recover some of the money back. Because position is not, if if it's not officially closed, you haven't taken a loss. That doesn't consider as a loss. But looking at down position is not fun either. I get that. We all goes through that thing. One position is down like $600-700. Like, geez, like, they're just like, okay, well, I have a month and a half left. I'll see how the chart looks and we'll see where we could find a potential support. We might add something, might open something else, trade another pair, you know. Because I'm always moving. I'm not just, okay, I have a trade open that is working. If it's starting to go against me, that doesn't mean that I'm just going to sit on my hand, just wait for that. I'm always looking for new trades. I'm just always going to be fighting off. If I'm going to find some setup, some certain trade is going to come to a certain level that I could buy, I will swing it. But you just have to, I don't think we're doing that horrible. Well, the Tesla is going to go on the full spread. I haven't had a loss since last month. You guys looked at the sheet. I haven't had a single loss that I put them in a book. This kind of a market. Just think for it. I don't even know how I did it. Last month, I did not have a single loss last month. Netflix was the one that I took a small bet on the earning. I was like, just wait, I'll take a revenge trade on that one. I got my money back. This month it's been kind of rough for a lot of people, and I get that because this nightmare right there we're just dealing with. the swing just definitely gives you a really nice look. Like you have a dip here and you have end up making a higher high. Same thing here. And now we're just trying to pull back. So where we could find our downside retracements, these are the ones they're all here. You can just take a snapshot of this one and just save it for next week. Simple as that. So I will be watching this. Let's watch 598, which is close to that 600, 6,000 mark, you know. So worst case, if the 6,000 is going to break, goes to 594, then 594 back to 600, 6,000 bounce. So you could just, it depends where the price will stop. You can play a bounce from this level to this level. And if this breaks, then this thing can come into a play. That's all it is. I mean, how much you think the thing is going to move? It moved what? 13 points? 13 points because we had a short week. The 10 ATR is at 15 points for 1 week. So if you take 600, add 15, that's 615. You take 600 and then minus 15 is 585 down here. Okay, so this is basically is what? Is a 1 standard deviation move. You have 1 standard deviation move here of 15, and you have 1 standard deviation move here to 15. That's the plan for next week. It's right there on your screen. Now the question is, you have to ask yourself, or I will ask myself, that can this happen next week? That we can get one full standard deviation move down toward this 554 kind of area. Same thing happens here. You can just take 18 from the closing price, add 18 to the top, add 18 to the bottom. That's a 1 standard deviation move. That's all we look for. That's how much the market is going to move anyways. 2 standard deviation move, you need a massive spike in volatility. But market just managed to trade only on an average week, almost a 1 standard deviation move every single week. Unless it gets stuck with the inside week, like one of these, it moves a little bit but just stays choppy. So this is very simple way of you looking at the price. Let's focus on high and lows, see where we can find retracement, where our retracement is, and then we can see where we can how we can project the upside. That's how I do with swings all day long. It just saves me so much time. You know, all we're looking for is what? We're looking for a support where we could buy. We're looking for a support where the price can stop, can find a potential floor, and then we will see like, okay, yes, where would we can set what we are looking for the price, that if the price can move to the upside. So what does that help? So the ATR is going to help you the most. That's your average true range. That's what ATR stands for, average true range. So you are doing what? You're trying to see if you can make, well, nobody makes a 1 full standard deviation move. You can make at least half of it. Depends how you size your trade. And just go from there. So weekly does help. You always have to look at a picture, the a lot of those guys who do levels, like there are a lot of level traders out there and stuff, that's what they're doing most of the time. There's nothing that's just considering more high and low, and they just take previous swings, then they just run high and low swings back and forth. So when you go to a smaller time frame, well, then of course you're going to see a much more price action over a 1 single week. Just a 1 week bar. That's it. So you have a high and you have a low. You have an open, you have a close. monthly is higher bar for SPY, higher bar for Qs, higher bar for IWM. As a matter of fact, look at the high here. Last month high was 230.32. This month high was 230.70. And we're just backing up. We just backed off all the way back down here toward 217. This one will close at the inside month Dow because it didn't make a new high. It just remain in the black. So we have 5 more days unless it's gonna come all the way back down to take out the 418. But it's just gonna end the month in the inside month. All swings are up. It's just not a bearish market. I mean, I mean, everybody wants to sit and call 15-year tops. Well, this is not what the screen is showing me. There's not in the world I will say like this is the top. I need to see some crazy weakness in the market along with the spike in volatility and a big hit on Mag 7s for me to make a case for that kind of a downside. I just don't see it. It's just not there for me to see. And I'm a buyer on dips. That's all I can say for now. Unless this screen can prove me wrong, then that's the different way. I will change my approach. But I'm just not gonna fight. Um, I'm not just gonna trade against the swings. I just don't do that. Um, Looking at some of these other charts, what we gotta do? We can leave it here. It really doesn't matter. I can do it on the same Qs. The good thing is this: I had them both side by side. They match. This is I wanted to make sure that that they stay side by side. You see, like same August low to 3 to 4, and I want to keep them because you cannot run a wave count. You see, I have them as a blue here, as a green here. It's the same thing. It's the same 4 wave, 3 wave decline and a 3 wave decline here in wave 4, and then we had a wave 5 up here. So this is what hour 2 hour chart. I like to keep them both side by side just to make sure, like, because when we just looked at those swings, as you can see, they're exactly because the swings are working the same way because everything depends on this side anyways. So I'm always looking at this thing first, then I will come to an S&P. Most people are fighting only this part. They don't even look at this side. How do you think the S&P is going to run without this? Don't you think you should be focused on more this side? Because this is everything, you know? Consider this more than this. This S&P, yes, is the main benchmark, but tech has to do all the work for this thing to move to the upside. It's just we'll see. Keep the butterfly as is, and we'll see where we can how the how the rest of the part will play out. Um, hang on one second. Hang on one second. Hang on, I'm gonna send you those two labels. Yeah, hang on one second. You know what? I took a picture yesterday. Hang on, let me do this.
There by the mirror, right?
Yeah, those two. Return.
Go brush your teeth.
Hang on. So then they will scan one by one because they're two different cables. Okay, Tesla. The 325 low that we just had before, right? Which we all know. This is a 15-minute chart. I mean, we can make a case for, oh, sure, no, we can go to 1 hour. It doesn't really make a difference. So we can do as a 1, 2, up in 3, 200%, triangle 4, up in 5. So we can count this thing as a 5 completed waves. Okay. So we have wave 1 down in 2, 38.2, 3 versus 1, 200%. Sort of sideways triangle here. And wave 4 up in 5 to 100%, 5 versus 1, which is 366. So the distance traveled here in wave 5, 5 versus 1 is the same distance traveled here in wave 1. From here, we could, if we have 5 waves up, what we need is, so this is the low. Remember we just talked about those earlier, right? This is the low, 524, 325. The high is 367. So what we are looking for now is higher low. Okay. So we're looking for a higher low. So we came back down. We took 1 as an A, up in B, and we can count C as a 3 wave, sorry, 5 smaller waves in that C wave, which is, remember, is an actionary wave. Cannot be a 3-way move. It must be 5. So we can count this thing as a 5. So where we at now? Right at 78.6. Okay, which is this 333 mark. Now, in order for this swing to hold, what I have it as a wave count, I just have a habit now to calling everything as a swing. This is the low. This is the high. Now we're looking for what? Higher low. This must hold. 78.6. Now, if we take 367 down to 348, projected here from 354, 100% relationship is at 336. So 336 of 100% and 78.6, taking this low to this high, sitting right there. So this is the zone it must hold for Monday or into Tuesday. If this breaks, okay, the invalidation for this is this 325. So this higher low swing must hold above this low. So if this breaks, then instead of making, we're looking at this to the upside, anything can happen, then we just gotta have to go back to this 1 hour. So we're basically go back right from A up in B, and we're looking for 1, 2, down in 3. This is the 4th, and we'll give one final push down in 5. So that 333 that you're looking at here, which is 78.6, is the same 7.8. So right there, 333.71. This is exactly where the price was put a low yesterday. Right there, you can see it. It's going to fight this one. And if you do break this, the 325 was the low. Okay. That goes up with this support right there. It could just literally make a double bottom here. We don't know how much of this 5th wave is going to come down. If it's going to come down a little bit more, it would depend on the market weakness. So what we have, 333, 325, then we have 321 is 5 versus 1, okay, which is the distance travel here in wave 1. Remember, wave 1 has a relationship with what? Wave 5, because these are motive waves. So in each trend, you have 3 motive waves. 1, 3, and 5. So your counter trend moves are 4 and 2. So this relation has a relationship with wave 2 has a relation because it's a corrective wave. Wave 2 has a relationship with wave 4. Wave 1 has a relationship with wave 5. This is the most easiest way you can understand Elliott wave. 3 is the one that's going to run its own. Because the wave 3 cannot be the shortest wave anyways. So you just have to take the look for 100% and 161.8. So golden ratio of, of an Elliott wave, which is this one right there, 161.8. You have a wave 1, down in 2. That's your textbook print for this is what every Elliott guy is looking for, 161.8 golden ratio of 3 versus 1. So this is what Tesla looks like. I have a diagonal at 350, and then if we break below this 325, so from that 320 from that 350, I will see if I can just set up another diagonal here to the downside and just leave it, you know so we'll just do that part. If we can just manage to move back up, which is going to be fine, if we can come in close to this 350 by the next month, the diagonal will be golden. So we got time. We have plenty of time. So we'll see what happens. We're going to be watching, but so we're going to be watching this 78.6 here. So there's a lot of support sitting here, as you can see. We have 78.6, 100, 5 versus 1, 321, 50% retracement from 212 low. Okay. Because that was, oops, where the other one went. That was 38.2, 355, 321, at 127 sitting at 314. So this is a pretty that's a good zone right down here. This is where we had a huge upside here. So then you have the support right there as well, 326. So this zone right there will probably put an end here to this fifth wave, and then from here the price should make a move higher in a couple of weeks. This is an hourly chart, so it's gonna take several weeks for this thing to play out. I hope we hold from here, but from going this route for Monday and Tuesday, upside resistance at 348, which is this low, and validation stays as is. And we'll see if we can try to, if the price can fight this one, and then see if it can try to show a bit of a bounce, or see if it can try to hit toward this 348 area. Would be nice. At least it will have some starting to show some upside. So basically toward that 350 mark. So this is what we're going to be watching for next few days. This, and we just gotta have to make sure this part right there holds this low, previous low. But if the low is gonna get taken out, then this part right there will act as a resistance. Remember, broken support on the way up act as a resistance, and that is gonna chew some time toward this 300, whatever the 315 kind of area. I mean, if 325 is gonna get taken out, I mean, depends how heavy it's gonna come. I mean, this most likely is probably gonna go hit the 300 mark. Because right now, most people are either betting on 350 or they're probably betting on 400 calls right now. So all the risk is gonna start moving back down toward 300 calls. So all the action then from whatever The good sign that the positivity that what I'm looking for, everything is based on rotation. Now, yesterday's sell off, okay, it it curved this one a little bit more on the left now. It was sitting here. Then it sold off yesterday, made this curve. I was really hoping for this thing to turn this way. So the good part is that RRG, this is due for make a move to the upside. Okay? Because we know the rotation is not going backward this side. It's gonna go like it's gonna go up. It's gonna go up like this. It's just a matter of like how many more days. This is each day of that these little dots right there that you see it on a tail. Okay, then how much of more time is going to take before it's starting to make a curve like this? It's starting to move toward the improving quadrant. So I have my finger crossed if we take this we like lower, okay, and as long as we can see that RG is sitting into the lagging quadrant, if that would push that curve a little bit more to the left, that will give the price this push to the downside. And then we just gotta have to wait for this RLG to start to form a hook from here. This is gonna be a really good buy zone. And just gonna leave it. I'm gonna add, if we do get another push down here to this kind of a zone here, I'm gonna add one more leap. That's what my plan is. So by 314, 315, that's the area I want to add. I want to add one more leap here, long data leap, and just leave it from here. And then we're just gonna have to wait to see for this, because this right there, right now, this rotation is very far from the center point. Remember, we want to be as far as possible. The further and further away the security is, more alpha you have on the trade. We need more alpha to make more money if we're gonna get the expected move to the upside. So the move to the upside on Tesla is gonna be wild. I can tell you that. Because further and further away the price is gonna push away from the benchmark, bigger the rotation is gonna come into a play. Do you see the rip on Nvidia? Look at that. You see that Nvidia just made that move all the way back up to fill the DeepSeek because you see how far away from the benchmark. Some of these stocks are kind of, but if you look at like this is what I look for and all day in hunt for trades. We played this one. We closed Microsoft. This one pushed kind of back here. Amazon is ugly right now. We played this one. What else did we play? I think that's it. Yeah, McDonald's stuff is over there. So I'm always looking more here, and then you can't. Well, the thing is this, that you cannot. I'm like, this updates in a real time, so you need to know what swing is you're on, and you need a wave count as well. You can't, because you can't just simply pick and start throwing risk on the board based on the RRG. It does help. It does show us the momentum, and it will show us that if which security will have good alpha that we could consider taking a trade. So it does help. I mean, you guys we have taken hundreds of trades. So it's just a matter of time, like how long does it take, for this rotation to play out. So, and then we have our support on our charts where we have a potential support that we could buy something and see we could wait for this momentum to pick back up and then see if the trade will play out. So it helps. It definitely helps a lot. So these are the 50 stocks. Okay, I mean, we can go to 100. It's going to be way more messy, but these are the top 50. They call Russell Top 50 Index. If you know, the Russell has a 50 index as well, not just only a 2000. So all the big stocks, 50 stocks with the market caps, they're all here. So the Tesla is here. Merck, DHR is the one is trying to recover from the low here, which is you can just open up a chart on the same ticker, any one. So it's trying to move back to the upside. This is a low right there. So I'm gonna be close to that 78.6. Let's see if we can do this. So you can just take this. Yeah, you see he's trying to fight that 78.6. So it's trying to get a bit of a bounce. This DHR took a pretty huge hit right there, a huge gap right there on the top as well. So I mean, if you want to label this thing, that's a different thing, but I can always count waves in my head. I mean, just the low, that's your high, and you're just trying to see if it's a 210 now after the bounce. The rotation's starting to look pretty good. So AMD is see, a lot of time rotation can get a little tricky. So you took this just so AMD got the bounce, but it's such a weak bounce. Look at all these daily bars. Let me do this. You see, it just really doesn't have any kind of a strong. I mean, there's so much noise about AMD, so cheap, this and that. Let it go cheap, I don't care. But it's a very weak bounce days after. These are daily bars. So if you are, if, um, but look into this rotation here, it's it's heading northeast, as we can see. So it has some room. So AMD might move, but you have to really convince me to buy this stock. We can do this. Take this high and low. So we have 110 and 108. So if you are a AMD fan, watch 110 and 108. If that rotation starting to come back, pick up momentum right there, this area from here for another day or two should try to reverse. We just gotta make sure this low 106, 106.50 low holds. Well, not there. You gotta make sure this holds 108 because you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is a 10 days, more than 2 weeks, right? So no, 2 weeks, 5 days in 1 week. So you have 2 weeks. So if you take the low here and the high here, which is 106 and 116, so now this one was a pretty nasty candle yesterday. So just watch 110, 1.8 and see if this can hold against this low and see. Well, we're gonna need to take you for your target would be at 116 because you need to see if we can make a push higher, if the price can make a push higher. So that's the swing looks like on this. See, it's still because it's down in full swing. So look at this. Yeah, it's a down swing for sure. That stock is up. Wow. Brutal. Yeah, this is two, and then you're gonna have what depends how much of the two is gonna go, and then you're gonna have another third swing to the downside. AMD just this is done. It has a yearly your the lower bar as well for the year. Yeah, this stock is done for the year. It's very hard to fight the upside on a stock when if it makes low on a bigger time frame, you know, yeah, your upside always going to be limited. I mean, it can move, but it's not something that you just rip all the way back to the upside. Once you made a low, that's it. The bar turns red. Like here, I'll show you on. Let's go back to the year. Here, you see, it made a low. That's the last year right there. So the last year low was 117. See the bar turns red. We're only in February. This bar right there will remain red now for the whole year until December. It's not going to turn green anymore because they already made a new low. The only well, what can happen, it has a problem, that it reverse all the way back to 227. If that happens, it will turn into that outside bar, which is going to be the blue bar, meaning that you made a new low and you're going to make a new high. That's a big tall. I mean, I don't know what AMD has to do this year. It happened here. He made a low here and a huge move to the upside. That was what, 1, 2, 3, 4, 5, 6, 7 years ago. Yeah, I mean, it's tough to fight the upside when you have a lower bar. Kitty cat, I'm watching this one. I've been watching this one. It's just that's a clear five-way move. 1, 2, 3, 4, 5. It's a beautiful, clean five. You see? Just that's that's all I do is just like if here's a chart, right? Like I look at this. Now this is what saves my time the most because all day my job is to find trades for all of you. So time is very important for me because we have 6.5 hour session. You know, charting is what I just ignore. I'm just not to spend too much time while market is open. I want to do this thing when in early morning when everything is quiet and I'm gonna be in my own room and just close the door and I'm gonna just be laser focused and then I just look at a price the way I wanted to see things, check multiple things across the board. But I'm just like this is cat, right? So let's do this. So we do this, okay? So it's real simple. You see, like you can make this thing as a I would do as a WXY because this is like a three-way move. So you can do this X because this is a three. So that's Y. 1, 2, 3, 4, 5. So you have one. You see, that's how I can count waves in my head. I don't need to label anything. I know exactly what the low is. I know exactly what the high is. So what we're looking for now is a three-way move against the five-way move, right? So we have five-way move, now we have three-way move. Okay, so where we can find support. Let's see. Oops, I want to go here. So we take Let's go do a fibs. We have 5-way move. We know after 5-way move, we get a 3-wave decline, right? So let's shut this thing off. So 78.6 is sitting at 330. Stock is at 340. So I have 10 more points to the downside. Our resistance is right here at 350 because 350 is where the previous low was. The previous low yesterday got taken out. Okay. So what we have here on this one is we have a 350 resistance. We have a 330 support, price sitting at 340. So have a 10 points to the upside, 10-point risk to the downside as its potential support. If we would get something, a push down here 330, I would buy something here right at the 78.6 to see if we can get a move back toward this 350 area. Okay. So we have 5 completed waves. Now we have to see this 3-wave decline that is coming down here where we can find support. So we have 330, 350 resistance. Now we can just measure this current swing here. We just take the extension tool, take this high to this low, project it to this high. There you go. We have 340. So we have 340, 330, and this. So your measured move is 322 right there. So your ideal zone to the downside that I will watch is this. So this will be the ideal zone. This is if the cat can get one more push to the downside here, and then here we could find an entry here in this zone right there, is to see if we can try to play the bounce back to the upside. So we can do that. So that's this, and then we can draw a channel, take this high to this high, project it to the bottom, leave it like this. Now we have the channel here with the top to the bottom. Now we know yesterday we have an overthrow to the downside out of the channel. So the price most likely will recover, will come back inside the channel one way or another. So Caterpillar now is trying to make a curve here. I'm going to watch this one. And then if we could find an entry here, and then if this RG comes into a play, yeah, we can squeeze 10, 15 point trades out of them, from this one. So this would be on a radar. That's what I do all day. That's what I look for trades. Now the thing is that this is the daily time frame. Now if you're gonna go switch everything to a 1 hour time frame, now you're gonna get a lot more price action. You see? You still have those same high and lows. Remember, we just looked at the 340.49 and then the same high right there. So the same decline is here coming from all the way to the top. But you have a lot of price data here now. Now you're just like, okay, well, this is 1, this is 2, here's your 3, then you go into a much smaller time frame now is to see where we could find, yeah, okay, the Caterpillar works really good with fibs as well, just to let you know. I used to trade this stock, so we're gonna watch this one. Google coming down here. Google is on a very high swing right now. See, it's on a 14 swing count. So this is very high for Google. Hope it stays above. There's going to be a problem. I mean, the swing is down. So what we can do, see, Google is trying to form, you see right there, well, they're both of them are here. The GOG and the L, the one with the one has the right to share, the vote, and the other one is non-voting one. Okay, so what we are looking at Google, um, we would grab a price marker. Previous swing high was here. One previous swing high was here. That got taken out with a gap. Okay. And we have a gap here, right there. I think it's probably an earning gap or whatever, 176. So we have a gap here at 176. Previous swing high at 182. This one is at one. See, now every swing that the price gonna get taken out to the downside, that's gonna be a resistance to the upside. So keep that thing in mind. So we could do is we just gonna have to take this high to this low where the 12 swing was and run these fibs and see where we can look for support. We're at 179, 78.6 is sitting at right at 175.69. So it's pretty close. So this one will fill that gap right there. This is going to be a really good area right there to play the bounce. So if this rotation right there, if Google is going to improve, I think this is the area I would consider some longs, right at that 175 area, that 70. What's going on? Do at 175. And then from here, we'll see how it looks. So I'm watching Google as well. I've done all this. I'm just showing you. I know all this. That's what I do all day. Microsoft, we already played. Um, this one has made a monster move. Look at that rip here. I don't know if somebody have looked at it or not. Look at this thing. This week, this stock took a huge hit on earnings. I don't know if there's if there's any news came out or what. This stock just made a crazy move this last 4 days. Just look at this. It's 1, 2, 3, 4 days, right? So there was Tuesday low, 12.64%. Every single day, the stock just ripped it to the upside. I don't know what happened here with Texas Instrument. One, two, three, some sort of a fourth here. So I would do it's a clean five-way move. 5, 1, 2. So 5 is, hang on, let me see if I can count this thing. 1, you either do a 2 here or here. 2, 1, 2, 3, 4. That's a little mess here. There's a lot of 3, no, 3. Okay, I know how to do. Okay, so do this, this, 3, 4. We got, oh, 3's gotta go here. Sorry, I got messed it up. 3 goes here. because this is a big move here. Then we can close this thing and do a we can do a 3 here, make this as a triangle, then get a fifth. So you have A, B, C. You see actually over there. C, D, and E as your 5. Goes your 1. I would do 2 here. 2, smaller 1, smaller 2, 3, 4, 5 of 3. Yeah, 1, 5, 2, 1, 2, 3, 4. You need to find 5 waves within that 3. So this is the most important because third wave is the longest wave. Cannot be the shortest wave, but it has to subdivide into a 5 smaller waves. So you need to find 5 waves somehow. So from here, take this decline. This is a pretty move. This 3 is a little tricky. It could come here as well. We can try to fit 5 here. Make this as some sort of a complex or some sort of like, or sort of triangle, because a lot of this like build out a distribution phase. Get one more push here to complete this 5th. Here's your 3 that came all the way back down here. Looking pretty interesting though, to be honest. But the move is done, to be honest. I hate to chase a running trade. You know? Yeah, this is a support that it held really good. What swing is this in? Ah. Okay, so this is the second swing anyways. So we shouldn't I wouldn't be fighting this thing because it has a downswing anyways. It's just a bounce in a second because it took out this low. Okay, let's see where the resistance is. Go backward from the bottom up instead of from the top down. Okay, it's right at 78661.8. So 211 is a 78.6. So it's right now it's at 6. The move is done. I'm not gonna chase this one. So 211, 78.6, and then you have 203, which is 61.8. So the bottom, the point is that this rotation right there played out really well for the bounce we just looked at them. Amazon being a bad boy. Okay, here's a deal on Amazon, and we can look at other charts as well. Amazon is pulling back in second swing. Okay. The stock is down 5 days now. Right there for 5 days. The the biggest losing streak the stock has ever had before was 7. That was back on October 3rd of 2024. That was this decline. And then it just managed to went sideways. It just went right back up. So the stock is very oversold. So now on top of it, if we go here to the RSI, this one is it's at 12.92. It's extremely oversold. So it's down for 5 days now. and it has 12.92 RSI reading. So the lowest reading the RSI had on Amazon. Oh, it's not gonna. Why is this one is colored one? Let's see the other one here. This one here is 11.55. It was the lowest read was back in July 22 of 2024. So we closed yesterday at 12.92. So this is definitely due for a bounce, right? Because it's pretty oversold here. So if we look at this lowest reading here on the RSI back in July of 2024, that's where the price was. So that decline that time was 10.48%. That puts that RSI down to 11.55. This current decline that we just had, that we're getting, is at 11. So this price with this price doesn't match side by side, as you can see it with the reading. So if that's the case, it has a bounce of 5%. That's how you, if you ever come across some beat up stocks, that's how you analyze price. So pay attention to it, what I'm doing. So you always have to look for the lowest read. So the lowest read was this one you had this decline, and it has an upside of 5. Now we're back at the same spot here with whatever, with 12, 11. So if we just match, I don't know what the low is, just copy paste the same range, just put it up here. Okay. So if there will be an expected bounce often off on Amazon, what we could be, where we what we can expect. So that's this. So we don't need this anymore. Okay. So we're just gonna play these two side by side. Okay, try to play this side by side to see what happens next week. Okay, so now what we're gonna do? We're gonna do is we're gonna find our swing is what is in 2. Okay, where we had our previous swing here. Now we're gonna take a weave up, throw it there. So the weave up is right at that 214.18 area, so close to that 214, 215 mark. Okay, so we don't need this. We got the low exactly where the swing low was. That's where we anchor the weave up. So the weave up is going to be right there. Now we come back here just to see where we can find where the bleeding is going to stop. Okay. Now let's see. Amazon had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it has been 10 days for this stock has not made a one single higher bar, meaning it didn't have one single higher bar. You can see right there. So this stock gapped down on earnings at inside day. These are daily time frame. lower bar, lower bar. So every single day, this stock has been making lower lows. As you can see, that all red, there's no green. We need one of these green bars. The only way the green bar is going to come, we need to make a higher bar. So the stock is at 12. Here's your VWAP. Don't have a single higher bar, an oversold stock. Okay. So where we can find support? We have this high, this low, and we're coming right back here. I would build this zone to here, to this VWAP. Okay. This. This area should hold. Here as a 3-bar swing. We have this high swing, 215.90. That's the low. Then we made a higher high here. Then we just came back here to this previous swing low, previous swing high. Found support, made a higher high. Now we're coming back down to the previous swing low, to this previous swing high. So this is going to be our zone right there. We have this VWAP sitting right there at 214. So the low was yesterday at 214.74. So literally almost there. So oversold RSI didn't have one single higher bar in the last 10 days. We measured to 11% decline when the RSI went oversold. This is 11.5. Where was that one? Here. That was 12 actually. Took 12. Yeah, the reading was here. It went up. So this is 12. This is 11.5. This is very similar to this. It's just a matter of another day or two. You see if you noticed it, because in this case, where the other side one? This one, because I'm just going off of the reading. See, because you're not gonna have the the best chart. No indicator is gonna give you a perfect bottom and perfect tops. Okay, that doesn't exist. So if you change this thing back to 14, which I hate them, I know a lot of guys are crazy about 14 RSI. I never use them. It just no, I don't care about 14. Too long. I want to eat my steak before. So 5 period is much better. So just going off of that reading here, okay, so we did that. I know this is the so the swing low was here on the volatility swing. This is a 3-bar swing. This is the area we're gonna watch. And if we measure, expect a bounce, that would be this, whatever the thing will stop. Consider a 5. If we do a 5 here, that will put us pretty much, I think, around here. See? This is what I mean, I don't know how much Amazon is going to come down here. But if we go back here, what I see is this. if this area holds with the VWAP, okay, and we have this swing high and this swing low, and this is exactly where we at now. If in the next couple days, if we just try to get a bump, like it will next week. That's the goal, like that. Week in a week and a half. If we can manage to get the Amazon try to recover from oversold, RSI, if we can try to make a move back toward 225, that would be ideal. Okay. If the price starting to break here, okay, it's gonna have a very, very good chance it's gonna come hit this 200 EMA. The 200 EMA is sitting at 200 now. So just keep that thing in mind. I'm not taking this beating. Just so I'll make my decision here in the next day or two to see what happens. So I'll see. There was a lot of calls were getting bought for April. Yesterday, there's some heavy, heavy volume for April. I believe it was 220 calls, I think. So you can see it on the thing. So this is what for now Amazon has left as of now. It is on a second swing. It will be eventually due for a third swing to the upside. But finger crossed, if market don't get too heavy, I mean, then of course Amazon is going to be under pressure. Amazon not going to just rally on its own. If the broader market is going to start coming down, the stock's going to be all under pressure. So I'm going to be watching this to see if we could just hold this area right there. And if we starting to close below here, I got no choice. I'm just going to cut the trade. I'm just going to cut the trade. Screw it. I don't care. I'll find something else. Yeah, I'm not, this 3 days has been brutal. It's just, yesterday was crazy. This was at least 2, 3 days was at least low, manageable, kind of like, okay, but this mess, look at the size of this thing.
Like my top level is my.
Look at the size of this thing, it's a huge bar. I mean, they had one hit as well. So it doesn't get them. Yeah, I would, this is the area that I will watch. Okay. That was Amazon. What else you want to watch? CMG. Oh, oh boy. CMG, what you can watch now is this. So this is your highest. Oh, we took a trade on that when we closed glad. Oh boy, I'm glad I did. Jeez. Oh, it's right there, 78.6. You gotta hold this low. Unless if it's gonna take that measured move, and then yeah. Yeah, and then people, I think the Wall Street is not really like the new CEO of CMG. It was the guy Brian who was running the show before. Now he's with Starbucks. He's the one who pumped that stock really, really good over the years. As soon as he left, see, Chipotle is just, and now with those tariffs and all that kind of stuff in Mexico, it got shaken out a few times because of avocado, the extra guac. So I mean, it actually closed low. I mean, 52. The low was 51.27. So watch this one. I mean, this is a downswing, so don't get too excited over playing a big move. There's your resistance right there. Right there. That's your upside resistance. Right from this. That's your resistance here. I mean, you just gotta have to see where you can, if it could stop. And then you're looking for if this one is down 1, 2, 3, 4, 5 days as well. This is XL, the sector XLY is dangerous. That's where, yeah, 5 days. I can see it. There's another one like Amazon, 5 days. Longest one was 7, was back here. So let's do a weave up from the top at 58. We could do one from this swing, 56. That's it. It just needs to find a floor. It's the same thing we're gonna do with the Broadcom, okay. And we will do with the same thing with Amazon. Is this is where we at. Um, Other than that, I just don't. Home Depot coming down, CRM is down. Here, United Healthcare took a hit yesterday. So this one is definitely down here. Google is starting to show some life. So I'm gonna be watching Google closely. So you can take a shot at this one. And Caterpillar. Microsoft we already played, but Microsoft has to close above this 200. You see it got rejected here. So that was right there, see? 418. That's exactly what I got out. I was like, I'm out. I was like, when you have Microsoft is trading below 200 EMA. But look at this chart. What is that? I don't even know what is this. I'm making a case here for a triangle. Where's my wave count? I mean, Microsoft is just a giant company. I don't know what the heck is going on here. 2 hours. I'm trying to make a case here for a triangle. This is exactly what I played. So I had him as a. Oh, man, on the side, buddy. This is an all-time high. 468 was back in July 5th of 2024. Last year in summer. Took initial dip. Here we had a lower high, higher low, and we're just sitting here. So from here, now we're going to zoom this price a little bit. I was like, okay, if this is B, this is A, this is B, and this is C. So if we have within C, we can do 1, 2, 3, 4, 5 diagonal here with an overthrow. I was like, if we have at least a 5-way move, we should expect a 3-way bounce for sure. Remember, like every 5 waves is going to have a 3-way bounce, right? I was like, I'll play that. Then I looked at the RRG and I was like, okay, you know what? It's starting to improve. I was like, okay, well, this is my downside, and then I'll take a shot here and see if we could make a move higher. I was well aware of that 200 EMA just sitting right there, that 418.65. This is exactly where the remember we just talked about those those diagonal targets, wave 4 and wave 2. So that's where I set them. I deleted those. So this is exactly what I was watching. I was like, I'm gonna set 2 targets, this and this. Okay. So I know that I've been trading this Elliott wave for a very long time. So they're very well defined targets anyways. I was like, I'm gonna target this 418. Then I know that a 200 sitting over there as well. I was like, okay, let's see. We can get then we finally got the push there. Got rejected. Boom. Yesterday we closed at what 408. So now going to the wave count, where we at? I mean, I don't know. I mean, do we have another push down? But it depends on this low here. If that's the case, I mean, then we just gotta have to move this three here, make this thing as a four, and then just look for one more push down here toward this 400 area. And then from there, we're starting to make a move higher, you know? So I don't know. I'm not gonna change anything yet until 404.37 breaks. So what I'm gonna do is I'm gonna slide this three here, make this a four, is a one, two, three. And then from here, we just look for this fifth wave of the C of this C. Okay, so it'll be a 5, 5, C, and C. So we'll land somewhere here. Then from there, we just look for this ABC move back up in D. Then another wave three, but they're Microsoft. So this sucker is not going anywhere for a long time. It's a nasty, kind of long sideways chop on this stock. You know, it looks, I mean, to me, it looks like a triangle if it's going to turn into a triangle. You have a huge gap here for earning as well. That needs to get filled. So 400, yeah, I will definitely look for this area right there. I'm gonna pick some calls here. 400 area. And play a bounce. What do you want on the rest of it? Oh, Broadcom. Hold on. We're gonna put this here. Broadcom is the stock split, you know. I'm really hoping Broadcom can make a move. I'm gonna move this thing out like this. If this is a four, okay, we don't need none of that stuff yet. If this is a four, sorry, the three-way move, what we will do is we will look for this. Now, this can come into a play with NVIDIA earnings next week. Okay. If it's not, then we just, you see like how huge this second wave was? So it's just trying to chew some time, you know? So I love this stock, you know, and what the issue was, remember I've been keep talking about this 235. You see right there? This is that liquidity zone. It's just so many times price keep coming back and back and back here and just keep rejecting over and over again. And then finally yesterday market got heavier and then took a look, you know, a bit of a leg down. So if this is a 1-2 from here, we can definitely consider that. So we have our resistance at 251. Well, definitely invalidation goes here. So we have our low here. If this is just a flat A, B, and C. So we're going to try to count this thing and see where we have our wave two. It's 2 versus 1. So we're right here to this 216. 221, we already broke below that. And then 221 is 61.8. So we're right sitting here. So can we count this thing 5 and a 3? Yeah, we can. Go here. So got 1, 2, 3, 4, 5. See, you have 5 within that 3. That's what you need. You want to have clean 5 within your 3 to make it work. Otherwise, your waveform is just not going to work. Make this as a blue. Make this one as, I want to do red. Red I use for corrections. Green, it's fine. So we have 1, 2, up in 3. Look at that. Right at that 200. Down in 4, right at that 50. Broadcom works really good with fibs. Just remember that. Okay, it's a very steady stock. And you have 5 versus 1 plus 1. So you have a 5-way move here. I would make this thing this. Okay. Some sort of a. So you had 3, 3, and you're definitely gonna have this 5 now toward the prior 4th wave. Right there. So if this thing, oh, this just went sideways. It doesn't have a bit of a tilt to the downside. We can, what if we would do something like this? Put 1 here, 3 here. Yeah, but this is a 3-way move. It's not gonna work. We need 5. No, that's good. The way I did it was good. Yeah, this is fine. Because this one here, we have a completed 5 within that 5. That's exactly what we need as well. Right there. Okay. 1, 2, 3, 4, 5. So we have 5 within that 5. Yeah, plus the ratios fits really good the way it is. Yeah, when I do the very first time is always right. I don't like to change things. So this is what, if this is the 4th, which is against this 2, it should find some, this is what I would watch. I do it with the swing most of the time, so I'm doing this thing right for you, the wave count. So this is what I will watch. We need to come back here toward this. This is where the price was rejecting before. Is to take out this high. And then there's a gap needs to get filled here as well, 241.91. So this gap wasn't even filled either. See, Nvidia did. But this was a sell-off from that cheap DeepSeek, and it recovered all the way back up, but it didn't really fill the gap yet. So now it just backed off. So we'll see. I'm going to keep my finger crossed on Nvidia to see if what that will do. But if you look at the price, well, I don't see anything bearish. It's a 3-way move. If that thing can turn something like this, that's another nightmare that we're going to deal with. So we just have to wait and see from here what happens. Okay. Just some of these, the bottom line is this, okay? I cannot get myself over this nightmare. Look at this. This is a chart of SMH, semiconductor. And we're talking July 11 high. What do you think this thing is doing here? What is that? If I just connect these highs and lows, some sort of a triangle. If you have this entire ETF that tracks all of these semis, NVIDIA, Broadcom, Texas, look what the ETF is doing. Since last year. I mean, if we go back a little bit more on time, this looks bearish. This is the October low from the bear market. This is the bear market we have, right? So from here, from taking this low, the last year, July, the high that we had, look at what the price is doing. It's a range bound market. That's all it, to me, is what it, this is exactly the same way we just looked at a Microsoft, July high from last year. These stocks are not doing anything. They're very range bound. Because I'm pretty sure right now you're watching this screen, you can tell a difference between this and this trend, right? It's a very long, this is accumulation. This is a distribution phase. That's exactly what is happening right now. It has a monster move from 2022 low, and it just chewing that time to the side, going sideways. So when you have accumulation, then you have a distribution phase. What do you expect after that? Accumulation, right? That's how the phase work, right? Or is there any other way? Let me know. Um, MA is take this one. This is some sort of a triangle. To me, that's what it looks like, or whatever the complex, I believe. Because Visa was it's a 2 hour chart. Visa was made a new all-time high. And so does this. So this is I mean, I was expecting that triangle ended here and it's gonna go, but again, triangle are very tricky. I mean, it's okay, but with these last 2 days took a leg down here. I mean, if we go back here a little bit more in time, I just don't see. I'm just looking for this as a fifth way move to the upside from here. The bigger picture I have is like this. Why this thing is so damn big? Bars. So I'm gonna have to. It's a daily time frame. These bars are so huge. Okay, looks all normal. So wave up, up in one, down in two, three, four. There's some sort of a fifth wave. So looking at this price right there, Either we can either go something like this. That's another way to look at them. Because Visa and Microsoft, they go side by side. So if we do just a simple measured move from this low to this high, projected down here from this swing low, equal measured move is 584. So just why this thing is so big. Okay. This. So I thought there was some sort of a triangle here. It could give one more push here to this 585 just to measure swing, move to the upside. So we'll see next week and see what happens. Well, I don't know what the high is. Yeah, then they can't draw a channel that wide. I just have to give a little bit of time. Financials got heavy because JP Morgan got hit. What, did you see that Jamie Dimon sold like I don't know how many millions of shares or whatever? I think I saw it last night on a Twitter. Somebody posted that on Jamie Dimon is selling like a bunch of JP Morgan shares. He's a numbskull. I don't have a coin here. I'll show you a swing. You see coin? It just, I don't know. I have to call the Motivate. It just doesn't, see, it's a blank chart. I have to contact the support and see what the heck is going on. Why I cannot pull up this coin ticker? Because I pull data from IQ feed. What doesn't show here? I have an IQ feed data. So it's the same one that I run them on Motivate as well because you got to pull data. And IQ feed and the data that I have, it has a limit of 100 tickers, which is a lot, because 100. So I'm gonna have to contact them, but I'll show you a swing. It's the same thing. Swing three, man. Swing three. I don't see this as a as a bearish chart, you know. I mean, it's just same thing. We just keep talking about accumulation and distribution phase, so I would just leave this one for now like this and see I would do this. We would do from the top down. There you go. Yeah, let's watch this 556. That's a 78.6 retracement here. So I'm gonna watch this one, see how it can hold. And so the 557, 560, 563. I don't know. I will leave this as I'm hoping for this. Sort of something like a sideways chop and then get a breakout. I don't see this thing coming down like this. Yeah, we just gotta have to give a few more days. Then we'll see what happens. At this, I wasn't really happy for this leg down because of the financials now. Coin, coin down in a first swing now. It took a yesterday was a nasty outside reversal bar of coin. And looking at the coin on this 1, 2, 3, 4, it's like 5 days, same thing. Probably down for like, yeah, 5 days. Last time it was 5 days in February. Oh, that was right there. Highest it went up, not, oh boy. Highest it went up like 10, no, 9. Back here was September 6th. What the hell happened there? This one, this decline. Yeah, that was a nasty reversal bar yesterday. Some of these stocks are like taking some really big hits. Like, like being down for like 5, 6, 7 days in a row. Like, I don't know. What exactly like? So, what are we looking at here? Well, this is the low. Now, well, we closed below that. And we have a gap here. Oh boy. We have a gap here. No. I was so excited yesterday that got a bit of a pop in the morning, the pre-market on the news that I was like, okay, at least it's gonna go, and then it turned out to a huge reversal day. Um, and this is a gap here now. This is in a failed swing, made a low because it broke below this low. Okay, let's do this. Where the heck we can find support? Okay. We have 61.8 is here. And this low. So we're gonna watch this low to this zone right there. Okay. And then we can project this decline from this swing to this high. So we have 240, 233, which is a 61.8 from this low. We can do a weave up. Oops, went all the way up there. Weave up is not gonna help. And 225. Oh man, we'll see what happens on Monday and Tuesday. Because this one I'm tracking, as you can see right there, MSTR. This sucker has a little bit more time to go. Okay. I reworked this entire wave count. I was like, kind of, so let me go back on a higher time frame. readjust this whole thing. So it's a pretty clean count, as you can see. So you can have diagonal here in 1, down in 2, up in 3. Okay. And this is the what I'm looking for, the fourth wave. Now, why is that? Now you have to look at this. So we have diagonal 1 and down in 2. So we have 1, 2, 3, triangle 4. And then from here we have the fifth wave. It's 5 versus 1. So this one right there, 61.8, which is a 61.8, this is a time and price relationship. But again, when you're looking at this stuff, when you see price and time relationship, this is a very advanced Elliott wave. Just to let you know, okay? You're not gonna see this anywhere on a Twitter or any person that you might know. How time actually works with Elliott wave. Elliott wave fib time relationship, okay, is only a guideline. There is not a very hard set rule because you can mess up your wave count. Your time is going to be all over the place, anyways. It's not going to work. You have to count your waves right, and then your ratio has to give you the same, the time. Sometimes you nail them really, really good. But it all depends how you count your waves. So it has to match. So it's not gonna, you're just learning now for the last couple weeks, and all of a sudden you just become an expert and thinking like, yeah, I'm just gonna start taking entries based on this time relationship. That's not how it works. That's I don't really. There's some. I do like I do a very advanced Elliott wave. Okay, I don't do just like a basic A, B, C, and X, W, X, Y labeling everywhere. I break each and every single wave to see how the actual wave count looks like. That's how it's supposed to look like. Normally people just put 1, 2, put 3 here, 4 here. They don't know nothing about smaller subdivisions like, which waves ends where it goes, and no relationship on a smaller waves, just the way it is. But I'm not gonna speak for anyone else. Um, this is what I'm looking at. Wave 2, up and 2, sorry, up and 1, down and 2, up and 3. So this wave 3, if we look at them, it was 3 versus 1, 200% relationship was at 394. Okay, so which is good. So within this 3 blue wave, we have 5 waves. That's exactly what we need. 5 smaller waves within the green 3. So the green 3 here was a few days. That's, yeah, a couple days. It was up here with that 100%. So what I'm watching right now on this is this wave 2 to line up with this wave 4. Okay. So this one was 35.36. This is 47.51. It's close. It's not that bad. Okay, I was hoping that thing just ended here. But if you look at a time, you see like from here to here was 26 bars. You see read that little banner right in between. It says 47.51%, or right above it says 26 bars. So when you look here, 57 bars. So you have a very hard time calling a bottom here, okay? If you have a slightly little bigger decline, but you didn't chew enough time yet compared to 2. Because your 2 has a relationship with wave 4, because they both are counter trend moves, right? Because they move against the trend wave. So your motive wave is this, wave 1. This is the counter trend move that move against your motive wave. So it's the same thing here. This wave 4 is moving against the motive wave. The motive wave is what? 1, 2, 3, 4, and 5. So the sequence is what? 1, 2, 3, 4, 5. So you complete a 5-way move. And then what happens from here? A, B, C, or W, X, Y. Then you get a counter trend move against the trend wave. And then what happens after that? You get another 5-wave to the upside, then another 3, then another 5. They just keep, that's how the sequence just keep going and going. Then the degree, the degree just gets higher and higher, the labeling, you know. So your smaller, so your degree labels, what the heck it went? Oops. Here, God. So you just go from 5 minute makes 1 minor, then 5 minor makes 1 intermediate, 5 intermediate makes 1 primary, 5 primary makes 1 degree cycle. You know, that's how a sequence goes. It's just, Elliott is so fractal. It's just a repeating pattern. That's why Elliott works so good on a higher time frame. But as soon as you're going to come down to a smaller time frame, it's just going to become a mess because you're just fighting that corrections and what, you know, a smaller time frame makes it very difficult. Wave counts. That's why I just don't even look at anything less than under a 1 hour time frame. It's just a complete, it's just never going to work. You got a cycle here, then 5 cycles makes 1 super cycle, you know, and that's how nobody goes to grand super cycle and stuff. That's just like, we're gonna die by that time. You're gonna get to a super millennium labeling on this one. I did this one on the S&P. If you saw it probably on a Twitter and stuff. This I had this monthly count. This is on a super cycle degree. This is this one. Label is this. Yeah, super cycle degree right there. Right there. So we're just looking at cycle, which is right there. So I did this one because I did on a Twitter as well, and you should see it there. This is a chart going all the way back to 1950. Okay, um, wave one, got wave one here, down two, up in 3, 4, 5. So you have a shorter one, you have extended 5. That's normal. If you have an extended one, you have a shorter 5. If you have a shorter one, you have an extended 5. If you have a leading diagonal in wave one, you have a very good chance you can have an extended 5th wave. So from 1950, first up to 109.37 was 73 bars. Okay. Then we had this correction here down to 60. That lasted 24. Okay. Now, this correction, then from here, if you take 1 and 2, 3 versus 1, that's what we always look for, right? Golden ratio. 161.8. It ended at 15,552. And the ratio was at what? 1277. So then from here, this was 73 bars. This was 24 bars. And wave 3, we all know that is always going to be what? Longer in magnitude and length compared to wave 1, right? It cannot be the shortest wave. It was 101 bars. That was definitely more than 73 bars, as we can see. It went straight right there to the ratio that we're looking for. Then we had this 3-wave decline. That's where we had the credit crisis low. That's when the Lehman Brothers collapsed. Then we're down to 666. Now the corrective waves of this 36 to the 24 is a couple months more, right? But it's close. Like what, 24 to 36? Well, not, I mean, it's another year, I would say. But corrective waves are 24 to this. Now the thing is that 73 bars. So you have 2 corrective waves in 2 and 4, And you have this fifth wave now. This fifth wave right now has a relationship with what? With wave one. Okay. Now you have to count credit crisis low, which is 666, project 73 days, 73 bars. The 73 bars is going to be the minimum time relationship of 5 versus 1 with wave 1. Okay. This is clearly a extended fifth wave. Okay. Then from here, we use a channeling technique with Elliott. So what does that do? You take this low, project it to this credit crisis low, and then you put it right on the top of this wave 3. This is where you had this 161.8, and just leave it. Okay. This will give you a target of wave 5, meaning that by that when the price will go and hit that line, okay, that's where you could expect the fifth wave will come in, hit the wall up there. So this is where we at now at 6,013. So from 6,013, depends how many more months it's going to take, but it has to come and hit this line right there. So Elliott wave use a very good channeling technique. People don't use them, which is fine. But it works really good with waves, especially with the wave count. Because when you are in a fourth wave, okay, on a counter trend move, and you're looking for that fifth wave push, that the channel. I mean, if you read a book, it will tell you the same thing. It gives you a pretty a nice way to look at what you can expect or where the price might go and hit the wall. Okay, so you can use that as well. So I'm not saying that there is not enough. There is plenty of room for this market to go. Now, if you just leave this labeling on one side for now and just to focus on time, if I just simply take 73 to 73 here, it doesn't end until April of 2027. We're at 2025, just starting in 2025. Okay, so we're a long way. This is the minimum, okay, bare minimum time it has to reach. Okay, the stuff that you're looking here this is pretty advanced hardcore stuff, so just pay attention to it. So I wrote it here as well. The confluence of fib timing of 5 versus 1 suggests this to be completed by April 27, which is right there, which is the minimum time relationship to reach the quality and time of this to this. Okay. If the cycle degree green wave 5, which is this one right there, is a cycle, blue one is a super cycle, gets extended. Remember, we can have an extended fifth wave. It's totally normal. Okay. Then we will look for the far right time projection, which I haven't done it yet here. So these ones are these prices after this time with these fibs. I didn't do those because I'm not going to go that far out, almost a decade. Okay, it's a long way to go. These are monthly bars. Like, it's going to take like several years to play out. This is a very clean wave count that it's been working for a very long time. Here's a COVID crash. Here's a 2022 bear market low. Okay, so we had COVID crash right there, and we had the bear market right there, 2022. So we have two of them here in this entire trend. Okay, going up from here since basically we had few of them here as well, but physically, like if you talk about those crashes, and this is like several months of bear market, the bear market threshold is 20%. When S&P drops 20% from peak to trough, okay, it officially enters into a bear market. That's when you're gonna see a Wall Street Journal will print a big headline report that market is in a bear market. So every time when you see a 5%, 10%, and 15%, to consider as the market corrections. And they're gonna come. They're gonna come over and over again. It's totally normal. Okay, we had many of them. We just looked at up those weekly time frames. We just had this 5.5% correction we just had. Remember? So 7%, 6%, 7%. That's just a totally normal decline. These are the declines are really good for any healthy trend. It takes a bit of a time, and then market will just resume back to the upside. So these pullbacks of 5, 6, 7%, they're very healthy signs for a trend because you just don't want to rip through straight and pretty much going up in a straight line. That's just not a good sign because the end is nasty for that one. So I'm not, I'm just like me, how I have my portfolio adjusted and what I am doing and what I'm going to be trading. I'm a buyer on dips. Okay. And I don't see any signs of a massive bear market starting or something. There's nothing here. I mean, we don't even closed below the middle of a channel line here to worry about for me to come down here. So if we simply you can just take two measured moves. If you take this, and I'm going to show you this thing on a different screen. If you take 666.79, take this entire move to the upside, take a COVID crash that we just had, right? Take this low, project it here to 100%, put you 11,000. Forget about 1, 2, 3, 4, 5. Just take two measure swings. Take the very low, which is this crash with COVID crash. So you have this low with the COVID low, 100% relationship. So you have, these are your biggest two retracements, right? So how are you going to project the upside? You project it from your retracement. You have a high swing, you have a higher low swing, and then you just look for a measured move. But you're almost at 11,000. I'm not saying it's going to go there anytime soon, but we have plenty of time to go. So this is where this wave count stands. So again, I don't do anything to it. I don't have to do anything to it anyways because this thing just gonna work on its own. I only labeled it the way it's would make sense the most. It's just a matter of waiting and see how once the price will reach the time quality, then I will see if I will see a bar open and close that month on whichever April of 2027 that is going to open and close it right on that line. And then I will see where we at, how the economy looks and all these things look like this. So I'm going to stay bullish. There's nothing bearish about the market, but about the dips and stuff, we'll manage that. I'm not worried about those, that part. Trading doesn't worry me at all. Let's put it this way. We're just starting off a new year, okay? And a lot of, I think it's much better to look at a bigger picture instead of fighting our lives on a smaller time frame all the time. That's the SPY. Oh boy, almost down at 28 yesterday. Yeah, this your VWAP sitting here on SPY as well, right? That's 600. Oh, you want to? No, I don't have. These are the anchored one that I use. This is on. You have to do OHLC. Um, yeah, you have to change it to open, high, low, and close. Yeah, you could do open, close, high, low, average. You can do many of them, median and stuff. Yeah, you have to use the one OHLC. Okay. You can just anchor that thing from the low. Yeah, VWAP definitely helps. It definitely works. As with swings, a lot of time I've had swings like I use them where the swing low is, and then you know I do watch them, and sometimes it's just like this is a Tesla. If I anchor this one here, like say if I do from this swing low, this is the highest swing here. You see, it's 378. So the weave up sitting here 378. And if I do one here from the very top, 398. We have 398 and 378 from this swing high and the from all-time high. So we got these ones. So you could do. So I'm not gonna. This it's not have enough. This is the previous swing. See, that just went up. So you just have to go back to this swing low. Probably if I do this, yeah, anchor. Because it's all depends, which low you're gonna use. That's the nightmare. It's the same thing like drawing a trend line. People draw people draw a trend line and it's like something like this. Oh, that's it. That's the end of the world. Or, well then you want to draw a line here. What about these lows? That doesn't exist. They're just like, oh, the trend broke. Okay. Teach me how to draw a line. That's the only thing I couldn't learn so far. um, I was gonna show you. Let me show you this. Let's go to the year. Let me show you the bigger picture. I know there are a lot of guys out there who's sitting with a bear outfit on all the time, who's sitting and calling for a 15-year highs all the time, every single day from the last 3, 4 years. What the actual market is actually telling you and what is actually showing you. Have you ever paid attention to that? This market, this is the yearly chart of an S&P 500 cash that goes all the way to almost back here, 1974. This is more than enough. Okay. Nobody's holding trades for 50, 20 years, 50 years anyways. 2, 3 years is more than enough price action. You don't even need that. Those people who's comparing 1929 to 2025. Just black and white picture with a color picture. Anyways, um, what do we see here? Here's a credit crisis low. We just looked at them on a wave count. Here's your COVID crash. Here's your bear market low of 2022. So what else do we have? I'm just looking at like biggest dips for the year. So I would just want you to pay attention to one thing is what happened here? This market from the last previous 3 years hasn't done anything. Do you see the difference here? This is the 3 years of your trading and your investing and this and this. This is COVID. And what market has done in the last previous 3 years? Done nothing. Just been sideways. This market is just breaking out after being sideways for 3 years. Do you see a difference here with this? What do you think the market is doing now? This is accumulation. This is distribution. This is accumulation. So here's the question that I have. If we had a 3 years of distribution right there, last year was the most easy year to become a bull, to stay a bull. Okay? The reason why it being is because we're just breaking out a triple top. I was hardcore bull last year and we did really good. As you guys who's been here with me for a long time, we did really good last year. I made a lot of money last year. I'm not going to lie. From here to Bitcoin as well. I killed Bitcoin from 54,000 entry all the way to 108. I'm just looking at this. I was like, okay, there's your COVID crash. This is the bear market low. And if we go here, up the previous year, we closed the year with an inside bar. The 2023, the 22 is this the low that we have, which is that's the bear market low, right? This is it was a 27% decline from peak to trough. There was an outside reversal bar. It made a high, it all the way back to a new low, and we just close it right there. And then we closed 2023 to cover all the way back up. We didn't make a new high, but we closed the year right there. It was a very strong close. I was like, triple top. It's like 2024 looks amazing. Just go bull. I don't. A lot of you guys who are with me for a long time, I don't even play any puts. Even the fact we had like several dips, we had like 5-10% decline on the way around to the upside, but we're just looking at a one full year. So don't paint yourself in that picture that, oh, there's a 5% decline. That's all there. But the point here is that because we're just starting off the year, I'm just like thinking like how I wanted to position myself for the rest of the year, because we're just in a second month. We just have all year to trade, So I'm just like trying to think like how can I position myself? How I would, what kind of changes or things that I have to do to my portfolio and see what I could add, what I could buy, things like this. But we have to look at the bigger picture when you're starting off a new year. So this is 2024. So a lot of people right now cannot stand this one thing that the market is up back-to-back years. Here was 22%. This is 22%. S&P is super expensive for earnings and all that stuff. I understand. Okay, it's a little bit there, but the point here is this market is just breaking out. So back to this, if you go back up here, So you had this huge trend coming up here, then you had these two couple crashes here. That's what the dot-com bubble is, and that's what the credit crisis is. That's what it is. And then we had this huge steady run all the way to the upside, but this market has not done anything from the last previous 3 years. As you can see it here, show me these three bars anywhere else on a chart like this. And you have people sitting day and night on Twitter telling you this is the market top. Even the fact this market is just breaking out after 3 years, after triple top. You think market ever gonna top with a triple top or a double top? Never. Indexes never forms double tops. Those liquidity zones they're just gonna get taken out one. I don't know when, but they will. It always does. No market, S&P, NDX, Dow Jones, Russell 2000 will top forms a double top. Never did, never. Well, that's what the price is. If it is, show me one. Do you see a double top here with the crash? Do you see a double top here with the crash? No. Double tops and triple tops, they're just gonna get taken out. It's just a matter of time when. Here, triple top, right there. What happened here? Here's triple top here. See? All these years. Didn't really make that much. The next year was a higher bar, and then boom. I know that this is what they call liquidity sweep. This is what the liquidity is sitting, and this is gonna get swept out. So now here's the thing that I wanted to understand, and I want to tell you that I don't know if I'm wrong, but I don't think so. Is this: you have an accumulation phase, you have a distribution phase that lasted 3 years, 1, 2, and 3, right? We managed to rally for 1 year last year. Now we had a higher yearly bar, as you can see, that makes it 2. So let me just get this thing straight. Somebody is going to tell me this, that distribution phase, which is 3 years, will be shorter than your accumulation phase. So how can accumulation phase can be shorter than your distribution phase? That's what I mean by, sorry. How? If you have 3 years of consolidation went sideways, your upside has to reach at least minimum 3 years. Then you look for 4. Your accumulation phase is always longer in magnitude and price compared to distribution phase. But it has to reach at least the minimum quality and time. If there is any distribution phase that you see which is lasts longer than your accumulation phase to the downside, I'd like to see that chart. Again, you're looking at the price on a much bigger time frame. Okay, these are the things that you can. These are the things you can do it on a smaller time frame as well, but that just becomes really messy, and you don't want to do that. If you just simply project the high and lows of this one, the reason because some people call me like a perma bull or something. I was like, are you kidding me? Do you look at the market, what the market is telling you? You trade what you see, not what you think, right? We always say that. We just, you can sit and think whatever you want. Doesn't mean anything. I think this, and some of those guys are like, oh, we're 6,000 here. We're gonna go up to a 6,100. When we're gonna come down to 5,900, then we're gonna rip back to 7,000. Okay, well, how do you know that? How do you know this? That we're gonna go here, we're gonna come down like this, and we're gonna go like this. Well, if you know all this, then why are you still trading? If you know exactly where the market is gonna go, hit that, where it's gonna reverse, where it's gonna find the support, where it's gonna go up, why are you still trading? If you know all of this stuff, and how do you even know this? Just bunch of pure nonsense. Look at this. Simply take a high and low, just project the upside. Take this low to this high. No, that's the extension. Take this low to this high. Look at this. 5,065, 55, 5410, 57,892. I mean, it went up to all the way to 6,060 was the high. Such a well-defined view. This is why I was bullish last year. I wasn't even posting a single chart pointing to the downside. I was like, this is the year to stay long. We're just breaking out this triple top. So now the question is this, okay, let's put the wave counts and everything up on one side, okay? Here we have a new president in the office, okay? We just closed out this year. Now we already know that we already had a new all-time high. So meaning that this bar has already turned green and it's gonna stay green for the entire year, okay? Now it can only reverse, will turn into this bar if it's gonna take out the low of 2023, which is 46.82. So meaning that you're looking for a full reversal back down here for this bar to turn blue. I don't think so. But the point is, like, if this market is just getting out of this distribution phase, this market has an upside. As a matter of fact, I did this thing. Give me a second. I think I did it on, because every year on the first, I always do a full yearly recap. Hang on. Where the heck it went? Here. Yeah, 2025 upside projections. Right there. You see this? See the distribution phase? Here's the accumulation. These 2 years right there, there was a distribution. Then we rise back up to accumulation, up till here. You see this line right there, 3 years? That's where it is. Now we're breaking up. That's how the market phase work. Accumulation, distribution, accumulation, distribution. That's how that goes. This SMH chart that we just looked at it, what do you think is happening? It's distribution. What the Microsoft chart we're looking at, it's distribution. But the nasty chop, when you trade with options, is painful. It hurts. If you're a shareholder, if you not really need that cash, if you wanted to invest it, then you have all the time in the world. You can just stay invested. It's a good company. It's a very good company, strong company that you can buy for a long term. But you just have to wait it out to see when that damn distribution phase is going to end, and then the price can resume back to the upside. What do you think is here? I I even did this thing. Here's distribution. Here's your accumulation to the upside, and here's your 3 years of, look at the top, 4808, 4818, 4793 with an inside buy. We just looked at it. This year we just closed. And so you telling me, or anybody out there is going to try to tell me that we just managed to stay up 2 years and we just actually started in second year after 3 years being sideways? I don't think so. I just don't think so. I know how price works. I've been doing this thing for 18 years. That's all I do. I'm a technician. That's all I analyze price. I look for patterns. I have GAN swings, Elliott wave, I have signals. I have a bunch of things. I can swing a trade from any corner. It doesn't, I just don't fully just rely on just one thing alone. Elliott, I don't have to learn anything. I know everything about Elliott wave. There's nothing for me to learn. But it's like, if you just simply, we just projected this this one went all the way to 6,069. Now we had a new high. Now the question is, what kind of a retracement do we expect? Well, we don't know that. Okay, so what kind of a, if you just wanted to focus on a simple high and low for the year, you can, so you might, the point is like this. I'm not saying that market is not going to take a hit in the next 4 years. It will. It always, I'm not being, I hate to be sound political, but but market crash with the Republican, with the Republican president. Okay. Keep that thing in mind, and history repeats. And what I mean by that is Bush, credit crisis low, Lehman Brothers collapse, right? That's the low right there, whichever, that's 666. Obama came, 1, 2, 3, 4, 5, 6, 7, 8. That's when Obama went home after this crash. Okay. Here comes a Trump. 1, 2, comes COVID. Republican president. Went up. 4. Here comes Biden. 1, 2. Oops, no, I probably missed one. I'm missing this. Yeah, because he just left it here. 1, 2, 3, and 4. That's where February now Trump came. So what do you see here? So what did they tell you? Bush, Trump, 2 Republican, Democrat from here. We track presidential cycles all the time, right? We talk about them all the time, like how strong they are, this and that, So whoever out there sitting and calling a market crash and this, we have a newly elected president that he's crazy about a stock market and Bitcoin, and he who just got elected get to enjoy only this part, and this is the all-time high for the market. If you really think this, well, I'm not pointing fingers at anyone, you're an idiot. So you have a newly elected president who just came in trying to set up all his policies and trying to clean up a mess, this and that. This is all he gets. And you're looking at this. After this. I mean, you need some serious help. That's what, if that's your approach is to the market. It's not how I see it. I mean, his like if we just simply take his last presidency, take a COVID low when he left the office, 117%. Just taking a COVID low. So if you take a COVID low, just measure two simple, we just measure two crashes, like two bear markets, not crashes. People just obsessed with this crash word all the time. Crash, crash. Take the COVID low, take the peak of the bear market of 2022, projected from the low, right here, 61.18 after a year. See how market works? Look at that, almost to the penny, 61.18. You simply measure two bear market, one here and one here. Look at this. There's many ways you can run projections. You can do high to low from 1, and then you can just, there's many ways to look. But look at the top using these swing, this low swing to this high projected from this low of COVID low, right there. Sorry, 2022 low. Pay attention what I show you. You're gonna learn a lot. Don't judge. It's a learning curve. Because when you starting to look at things on a bigger time frame, that's how you can make adjustments to your portfolio, what you're willing to hold and how you want to, stay invested. But at the same time, if you're talking about, oh, next week is going to be a bear market or 2 weeks going to be a bit more, that's a very short-term approach that you have. If you just looking to see if I could catch a 50-point move to the downside, yes, you can definitely make money. We all can make money. But we as a trader just wants to hit them trades on both sides. Oh, I want to play the upside. I want to play the downside. Like that's different, which is fine. We can do all this. So bull trade is going to get hurt when people market reverses. If you're on the right side of the market, yes, you get rewarded. Any news can break out on a stock pops, it rewards you. So we have all this, but at the same time, more and more trades you do, more and more risk you're throwing out there, but you have to make sure that you're going to be more right than you can be wrong to make money. We're all going to be wrong. I cannot run a 6 months winning train. I had a since last year, I had a pretty nice run. I'm not gonna lie, but it's just, a few things yesterday things got shaken out. It doesn't mean that we're not gonna trade anything on Monday or Tuesday. We'll find plenty more trades. I'm not worried about that. Trading is already a stress. I'm not thinking about it, which you have no control over it. It doesn't do anything to you. It's making it even worse. We simply trading the unknown. We don't know what is going to happen on Monday. Market just rip right back up. We don't know that. It's not like we've never seen that movie before. or it can just consolidate for a couple more days. Just to choose some time. It's just the month is ending. Okay, the last week. I mean, going back to seasonality, S&P. There you go. Back to the flat line. February is is definitely, you see, you have a rise here and we have a decline here toward the end. So if you look at the average monthly performance of an S&P since from 1975 to 2025, it's just barely up. Now we're like, yesterday we poked a little bit down here. Now it turned red. It was green before, not until yesterday. So this month right there on the range, we have 3.64 from peak to trough. Last month was 6.15. This one was 4.39. This one's 6.1. This is a trending market right there. This is where you make the most money when you have this kind of a range. You know? 6.75, 10.40, like these kind of like high numbers, anything in this 3 range, mess. I've noticed that thing a lot. Like this is why I have this is a monthly percentage return. It calculates the exact range, you know? Like what do you see? Let's go back here. Let me just do this. Because I got this thing pinned here. So how many down months do you see compared to the green months? Oh, this is the highlighted part. This is where the recession hit. The Optima has this recession tool. See where this highlighted part is? That's where the recession entered. See, that's with the COVID. That's with the credit crisis low. They was looking at 664. So recession is coming. Okay. It's just all noise. It's just people just firing off from all cylinders and see where they're gonna get lucky. Option trading is always is already stressful, you know, and on top of it, like day and night, this every genius is sitting out there telling the world is this is the top. The the market is just like breaking out from last year, and you're telling me it's a top? Okay. Well, I'm not gonna repeat myself. I already talked enough. I just wanted to show you what how I am looking at 2025. I think the first quarter, well, like let's say if we would, I want to change, we can. March looks pretty decent. Okay, look at right there. April looks very strong. Okay, so I would I would consider, I mean, that's what I'm looking for. It all depends on RG. Again, I need to find momentum. I need to find alpha. If I have those, I'm going to go after a chart. That's what I'm going to find trades. And that's how I'm going to swing trades. That's my approach that's how I trade. I don't just blindly pick a certain stock and just throw in money and see if I'm going to get lucky or not. I don't do that. That's not the way I trade. Exactly. You know my style. I take multiple things. I'll find a signal. But my rotation these are the things has to look right for me for the trade to play out. And you guys been rewarded pretty good, so nobody should ever complain about few losing trades. It's gonna be all fixed. Don't worry about that. March, it looks good. April looks very strong. You see, like rest of the couple months looks. February is it's just it's been a flat month, had a history, and we can definitely see. And I wouldn't be surprised the next 4 or 5 days, the 4 days, next week, which is pretty much kind of like sit flat, close to 6,000, just to end the month, you know. So and we could dip a little bit more. It doesn't matter, but we'll see what happens. Looking at Meta, see February flat. Meta's taking a hit as well. See, February for overall for the market has just been not. Netflix is the good one. Now Netflix, what the hell is this? Now the Netflix is a good one, and is the one that just sitting around like 1,000 mark now. Then uh, S&P, we already did this. Nvidia had a very strong February. So, well, no wonder why, you see. February is pretty strong. I don't know why I missed that thing. No wonder Nvidia made a pretty big bounce after that DeepSeek sell-off. It's a very strong month for Nvidia, February. I didn't play that bounce. Well, I did with Broadcom 2 weeks ago, but didn't really just crazy rebound Nvidia has made. So the earnings are next week. Nvidia is geez, flat for the year. So I don't know. This is just so it looks like the 134. Yeah, so 134 kind of that kind of price is a flat line for Nvidia for year to date. Well, yeah, because that's the close here anyways. That makes sense right there. There you go. So the Nvidia flat line based on the percentage, depends how much it moves up and down, is the 134 price. Okay, so remember that. And let me tell you the one more thing. Tesla one. God, what I was going to show you here. Tesla $1 trillion market cap. Okay, has a threshold, I believe, 314 or 315. Remember that. Okay, that is very important for a stock as well. Keep that thing in mind to lose a crown for a $1 trillion market cap, or when you get to that two, and then you always just remember those levels. Where does the certain price reaches and it has to maintain that $1 trillion market cap? So Tesla has it around either 314 or 313, somewhere around there. It's above 300 though. It's not 300. 300 is gonna push him under 1 trillion market cap. Okay, so remember that. So same thing with the Tesla is I believe is somewhere around his 1 or 2 points, but just to give you a range, I have to look it up. It's like 313 or 314. Like this area right there. If this leg is gonna get here, that's what I'm saying. This area is gonna get the market cap story should show some respawn as well. What was this? Amazon, man, this is freaking brutal. Amazon March looks really good. So it's down 1.28% though. Keep that if this is the thing. I understand our trade is getting hurt because of the leg that we took down for 2 days or so, 3 days. It's down like 1.28% for the year. Almost flat. Apple is under 2. This 3%. So Apple looks good. Microsoft, see, it's a very weak month for Microsoft. I mean, this one right there is for this 2025 that's happening right now. This is the average that takes all the way back from 80, 87, 25. This is everything I do. Because there's some guys they track seasonality for like 5 years or so, but I do everything. We can do that. I mean, I can change this thing. You see, like I do everything. I can do 5 years. See, it will change. So I do everything. Gives me a much better average to see how the actual stock performs on a much bigger, higher month-to-month average. Google, we can see the weaknesses. Some of these seasonality definitely playing out. You know, some of them are Amazon and Google. Seasonality is definitely in play this month for sure. And here's Tesla. It was decent, but not the way this month is going for that Tesla. Down 6, it's a war stock right now in Mag 7. Tesla it's down 16.35% year to date. So okay, sector wise, which sector we can put a bet on? Healthcare. March, if you just, well, because we're gonna be going into a March, so just pay attention to the March. Okay. Communication, communication, see, this is where we have our Meta, Netflix, and Google. You know, XLC. These are the top three leaders. Energy, 6% definitely looks pretty good for the year. Pretty strong seasonality chart here. Doing pretty good compared to the average. March is good for energy. Utilities, March is good. Anyway, it is down. But this is up. Oh, I didn't do the 1 month. How may change? I didn't do that one. This is I track all quarters. So I was still in first quarter, second, third. So it's all there. Financials. March doesn't look bad. Doesn't look bad. Consumer staples. You see, like, no, I would. Tech is good. It sells off in the end. It doesn't. Oh no, sorry. This is the XLK. Yeah, that's fine. Taking a full average. The current month is here. Yeah, consumer doesn't look bad. What I would do? Well, this is all good, but we need this. Where is my geez, here, the rotation. On a weekly time frame, see, healthcare looks good. Energy is looking good. Material looking good. Real estate is looking good. Industrial. Consumers, how many of them? Oh man, it's gonna be a mixed same thing. See, financials are forming a hook back up as well. Man, this thing is not gonna help Amazon and Tesla. All the other consumer discretionary stock has too many stocks. CMG. This could take several weeks and months to play out. Like if we go back here each month, the month will change here. See, like they were all down here. I'm worried about this technology. That drives the market. Communications, this one. I would focus more on some of these value stocks. Seriously, for some time. If you look at this is good for a couple of weeks. You see XLY. This is where we have this Amazon. It's just killing this sector. You know how big Amazon is? No, I know where it went. It's gonna do this SPDR. It saved that website. I don't know what happened. I think it has like it has over 20. Save that website. What the hell is that? Save this oh here. Oh, I had this thing as a okay. Yeah, XLY right there. See? Amazon has a lot of weight. 21%, that's 15. Yeah, Amazon is gonna come down. It's gonna drag that XLY right away. I know that for a fact. It's just too much weight to the top 10 holdings of XLY. Consumer discretionary stocks. If you take these 1, 2, 3, 4, 5, 6, 7, almost these companies, this makes one Amazon. Take McDonald's 5 and 4, that's what, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So 22% of these 5 companies, O'Reilly, Nike, Starbucks, Lowe's, TJX, Booking.com, and McDonald's makes one Amazon. That's how huge this company is. $2.5 trillion market cap, whatever. I don't know what the market cap right now. It's not a joke. So when you have this stock is going to get shaken out, and this, XLY is not going to work. It's not going to go anywhere. These are the top leaders. The other ones are just Chipotle's at 1.9. It doesn't. What do you think? These now, if Amazon is down, you need to find almost 30 to 35% worth of percentage of index weight for that XLY to hold, because it's too big, a lot of weight. But this is what it is. Marriott, Hilton, Airbnb, AutoZone. You see all these stocks, Lululemon 1.15. But these are like all small percentage. Decker, Darden, Carnival, eBay. All like 1 point. It's not like those. These all stocks we all know. Domino's, Ulta Beauty, Best Buy. These all consumer discretionary stuff. Ralph Lauren here. Win. This is 0.17. Mohawk. MGM and Wynn Resort is like 0.24. Yeah, it's just this might turn around. We gotta wait around here. Industrial, this is the one. If I'm watching this with the kitty cat, the caterpillar, I need this rotation. Come to work with cat. Then we can swing a trade. Healthcare here looking a little nasty, to be honest. Healthcare, I mean, I don't know. Healthcare is doing good, but not yesterday. But I mean, I don't know. If we go back here, I like to trade the leaders. You just want to put some. Largest one is going to be well, Eli Lilly right there is 12.9. So United Healthcare is 8. That's the baby oil. 7. AbbVie, Abbott, Merck, ISRG, Amgen. I like to trade this stock, Amgen. The Dow 30 stock as well. I think we had a trade last month, I think. Boston and this. Yeah, Eli Lilly is the leader of 12 and UNH. Johnson Johnson has a pretty big weight as well. Along with, we need to find something here in healthcare. Well, all these top 10s, I don't have to go anywhere. I have them here. Top 10 market weight. I already scripted those one by one. I don't know what these lines are. Know exactly which stock is where. So we will go with the sector XLY, which is fine. It's gonna pull up here. So these are all the top market weighted companies. Utilities, Union Pacific. This is actually turning around. Uber. Where is this Uber here? Oh, Uber is up here. And these are very selective. These are only I made this list with the top 10 market with one. All the stocks that you're looking at there on their website is all here. Technology. Okay, what do we see here? Alphabet, Salesforce, Microsoft. See, we did this one. Accenture, Meta, Netflix. I wouldn't touch those ones for now. Oracle is coming down as well. No. Take-Two is very strong. Retail side. See, now. Amazon has Target is Costco is weakening. Walmart, TJX because of the XLY is down. You see how all these stocks are falling. XLY right there. See, now take this with this. So it gives you the answer. Tell you exactly what you're trading. It's all here. You don't have to go anywhere else. That's the cat. That deer, John Deere is really good. John Deere made a huge reversal to the upside from here. It sold off on earnings and ripped right back up because this rotation definitely strong. So we just looked at. We're gonna watching Caterpillar. This is his industrial right there. You see. So this is take a shot at this one. Would be a non-energy material. Freeport Macromart is all up there. We have these two. This is a very big company. This one taking a leg lower. Got a double top there. Oh boy. This one taking a leg lower. This one, yeah, these two works pretty much side by side. They are the two top material companies. Vulcan, this is huge. This company is. You've probably seen those massive machinery, trucks and stuff from this company. Um, definitely coming off from the highs. Healthcare, Thermo Fisher. Merck and this are the ones that are willing to rotate in. Eli Lilly just had his move. Yeah, I'm gonna pick something here because a lot of them, the move has already been done because they already made this rotation all the way back here. So you just have to focus here somewhere. This is where because they're gonna be improving. Leading is gonna be weakening. It's weakening at some point. Yeah, we wanna buy low. Where are we at on the healthcare? This is too close. This liquidity on the stock sucks. ISRG. Thermo Fisher is something might. I don't know the liquidity on the stock though. I don't know how liquid the chain is. There's some sort of an inverse head and shoulder pattern. Look at this. Hmm, not bad. Not a cheap stock. Finance, American Express is just digital. There you go. Morgan Stanley, CBRE, Wells Fargo, JP Morgan Chase, Goldman Sachs, they're all coming down. They're all coming down. Bank of America is already here. American Express is the one leading the board. What the hell happened here? Only this part? It's almost 10%. American Express. Financials are a little bit. I think I need to start trading a little bit more financials. I know somebody was telling me.
Me.
Oh, yeah. You are the financial queen. I'll look into it. You see, because the only stock that actual move is Goldman Sachs. Goldman Sachs has a high ATR. It's a good beta stock. Like Bank of America is so damn hard to trade because it only moves like 1, 2 points on average. These are like very like 40 for you see like 40, 40, 20. I mean, it's not like you cannot make, but you have to size up these kind of a trade big time to make money for like 1 point move, 1.5, 2 point move. So that's why I mean, you could holding shares is okay. But like if you look at Goldman Sachs, this sucker moves. This stock has a good alpha. So, 625. See, like, so it's okay. Nothing really. Crown Castle is my another favorite one. It's trying to it's weak. I like the stock, but it's very rate sensitive. Crown Castle and AMT. AMT is my favorite. I've taken a lot of trades on this stock. I like trading that stock. You see, they're side by side. If you take Crown Castle and if you lay it AMT on top of it, it's gonna look exactly the same. So, but these two stocks, they're very rate sensitive stock. Okay, especially with 10-year yield. As soon as the 10-year yields will rise, these stocks gonna get punished hard. So if you ever like just get to decide like, well, I am bearish, like you think the rates will back off, okay, and if you wanted to find a stock that is very highly correlated with the yields, these two are the stocks that you could possibly find trades. Like let's say small cap stocks, right? Small cap stocks get hurt with the 10-year yields, right? If the 10-year yields backs off, small caps takes off, right? So some of these small caps are still a dead beat because they're not as strong and plus they're not as big as these two, right? Because these are the leaders. It comes into that top 10 category. So these ones right there is always a very good bet against the yields. You have American Tower and you have a CCI, which is a Crown Castle. These two. Okay, so just remember that. You can write them down as well. These two stocks are very highly correlated with the 10-year yields. Because you want to, because I like to trade a stock that moves. I don't trade. I actually, as a matter of fact, traded that fast trade, that the trade we just took on ticker fast, FAST. I was just watching the rotation, looks pretty interesting. I've never traded that stock before. I was like, you know what, I'll take a chance. So I should have sized up that trade. It hit really nice right to the target. But again, the point is like I really didn't know much about the company. I simply just looked at the rotation, looks pretty good to me. I looked at the swing. Swing looks pretty interesting, and I was like, you know what? I'll trade him at one time. I had no idea what the option liquidity is on the option chain, and I was like, I'll take a small shot for now and see, and then we'll go from there. So about a small trade, nothing big. Um, Probably like what 43, 44% trade. Um, what was this? What we had? We were in finance, energy material, ConocoPhillips. I'm gonna blow it up. Let me see. This stock is not doing anything. Chevron, this is all energy stock. Sideways chop. This one has a little bit more slope to the downside. This one has more decline towards the downside as well. Where we at on energy? Oh, we did finance, energy materials, and then electronic technology. I cannot see we got Nvidia here, Apple here, Broadcom coming close. G is weakening. RTX is not. I wanna trade this. I'm watching this. I don't wanna. I need a bit more push to the downside. Yeah, I just wanna. This is a very strong swing to the upside. I just wanna see if this weakness right there. I'm watching this. RTX. So I can play this one. Honeywell. This just got split into a three. You know, Honeywell might reverse. Yeah, this turned into a three different companies. An eye on Honey. Lockheed Martin. Oh, AMD. Just okay. We already looked at them. Nvidia looks good into an earnings. I hope it holds. Apple is good. Consumer services. Chipotle is the worst one. Mickey Mouse is starting to turn. Down stock. The regular charter. McDonald's is fine. Already made our earning move. Booking just popped on earnings. You got Comcast. Consumer staple only Tesla, which you already know. Communication, T-Mobile, It narrows the market cap because I have everything here. Commercial services, MasterCard or Visa. We still got a little bit of a hope here. I hope that this thing holds. And then who knows? This week, MasterCard put an outside weekly bar. Swing is still up. The last week was a week before was the inside week. It is funny that Visa and MasterCard control 80% of the market. If you don't use them, oh, what happened here? That close. If you use somebody else, they're like a monopoly. They're gonna come and threat you. 80% of the market. It's insane. What did I do here? Did I close this? Okay, that's fine. Close it. Did I close this? Okay, so I think we're done. My wife is gonna kill me. Oh, that's been a lot of time. Tired.